How's it going, everybody? How's it going? Welcome to a Capital Hungry live trading session. We are coming up to pre-London hours here, October 21st, Wednesday, October 21st, 1:35 a.m. Eastern. Just had new 4-hour candles close and open across main pairs, as well as for those of you who are new to the stream, we are going to be using various fundamental and technical concepts to map out potential trade ideas from an intraday and scalping perspective across XAUUSD, GBPJPY, EURUSD, USDCAD, as well as US30, aka Dow Jones. So how's everybody doing? We'll just give a few minutes and let everybody get situated. Yeah, October flew. 2020 was a blur, but October flew. How's everybody doing in the chat, YouTube chat? Share the stream around right now. Let's just get everybody joining, get everybody situated, and we will start doing some intraday analysis as well as looking at market sentiment, market structure, lower time frame price action alongside the key levels, any economic events we have going on, and key fundamentals we have to keep an eye on. And then we'll map out some potential trade ideas that we can take through London session. You guys got midterms, everything going on. Yeah, we just started the stream, so we're just letting people get situated. The DVR mode is enabled, so you guys, of course, can rewind the stream as it's going on if you want to go back and watch some analysis we discussed. This way, I don't have to repeat myself like 1,000 times as well. And for those of you who are new, you have some live news to the left here. These are real-time streaming news headlines coming from the Capital Hungry News Telegram. And then, of course, you have your chart. We also have added some features such as some of the key fundamental points to keep an eye on for this session, which for today, for example, are the facts that markets have been more optimistic through NY session. U.S. stimulus talks are progressing as per Nancy Pelosi towards the end of New York. We did have positive trade talks between the UK and US. The no-deal Brexit so far is being taken as optimistic for the British pound, but there's still a lot of uncertainty that lingers around global coronavirus cases. For example, through Asian session, we saw how cases are spiking in the Asia Pacific region, such as New Zealand and Australia, and their respective central banks are talking about the potential downside risks. But besides the real-time streaming news headlines to the left, this is just some quick recent fundamental points over the last session or two period, pretty much from New York and Asian. And we can see that this market optimism has led to equities holding some more strength through those respective sessions, as well as our safe haven currencies such as the US dollar, Japanese yen, being more bearish as well. So those are just some quick fundamental points I can pull up and close as we go. For some economic events, we just have the UK CPI figures around 2 in the morning, and we will talk about that when we do the GBPJPY analysis of some potential trade ideas we are looking at. And other than that, we just have the Canadian CPI during New York session at 8:30 in the morning, and the Canadian retail sales at 8:30 a.m. Eastern as well. And we just want to note that we do have ECB and Fed speakers through London and New York session. Obviously, the ECB and some of the Bank of England speakers are through London Euro session, and the Fed speakers will be during the North American hours through New York. But just something you want to keep an eye on, and we will get our headlines on the left side here. For example, we already have some speakers from the EU or Italy's economy minister giving some comments about some of the new about some economic downside risk and how they are seeing economic recovery. It hasn't had too much of an impact on the charts just yet, but we want to keep an eye on that. So those are some of the economic events we just have going on as well. And when you are on the stream, you will always get the occasional pop-up mental and psychology reminder to stay smart, follow your trading plan, follow your risk management plan, make sure you keep your emotions in check and control, don't get antsy, don't feel impulsive, don't let your heart race, and avoid crashing your account. This is a game of probabilities. It is a long-term game, and we are just focused on doing analysis and creating trade ideas with probability in our favor using different technical and fundamental concepts and repeating that process with good risk management. Okay, we are not here to be right all the time. You get what I'm saying? We are just here to try to map out some trades and take those potential good trades. But anyways, so that market optimism, when we are looking at some of our fear and greed indicators, for example, the volatility index, it's closed now, but has still failed to break previous intraday highs. And when you zoom out, is still is still respecting bearish structure with the potential to revisit these lows. The Japanese yen the Japanese yen has been flat for an extended period of days now. And of course, the US dollar is still in bearish structure. We are just going to be primarily looking at the Japanese yen and the US dollar, as well as global equities for our fear and greed sentiment indicators to tell us how investor behavior is, alongside the market structure and the price action as well. No, it's not short-term optimism. Just because with the no deal Brexit and the potential for the UK to follow Australian style trade agreement, which is just following the WTO universal rules, because Brexit has been going on for such an extended period of years since late 2015, even this potential for a no deal is showing some progression. At least it is showing that they can finally start making some movement for their own UK economic rebound, and they're finally doing at least something, where the last 5 years has just been a constant mess and a constant back and forth. At least if they finally do leave on Australian style rules, at least it's some type of progress where the UK can now take their focus away from all this Brexit mess and actually start focusing on creating good trade deals with other countries and rebounding their economy as a whole country. You know what I mean? So from this point, a no deal Brexit and then finally moving on, it would be taken as optimistic. It's like somebody getting over a bad ex-girlfriend and finally moving on. Yeah, it's not some groundbreaking shit, but that you've probably been carrying that weight for an extended period of years, and it's been impacting your social and personal life, right? You've been worrying about this ex-girlfriend, she's been out doing her thing. Now finally years later, you finally got the balls to do your thing and move on and finally start developing yourself as a person. That's how I'm seeing it for Brexit, and the UK and European Union relationship, right? But anyways, so markets are more optimistic. We're just going to be watching the US dollar on the intraday time frames. We can see, of course, US dollar on the higher time frames, like when you go to like the daily chart, extremely bearish, right? It's not hard to see that the US dollar is still bearish as global equities have been more bullish, because that mass printing of the US dollar to support global equities also led to an oversupply and a devaluation of the US dollar itself, right? So it was a double-edged sword when the Federal Reserve did that mass printing, because it was something that was needed to support the weak US economy at that time. And at that time, the stock market was also having a heavy short sell off as well when coronavirus fears first hit the market. But with that Fed injection also came the downside of temporarily having a very weak US dollar. Brexit has already caused many people to be unemployed for the last 5 years, as it's been impacting import and export. Like there's already like the UK is already seeing mass unemployment from coronavirus itself as well. The whole world has seen mass unemployment. I don't think Brexit's going to have that much of an impact from that point on if they're finally looking to make some economic changes. It's just about how they're going to deal with the different trade rules now with other countries. But anyway, so we do want to play that potential continued US dollar weakness. Even if we get a pullback to retest structure, we are seeing some more bearish market structure developing now as well. And even as long as we get a pullback to retest structure and still continue down, or we break below 92.75, this weakness in the US dollar and market optimistic market sentiment, as well as if we notice the yen still stays flat, even though it's closed right now, we notice that it still did close flat and overall is bearish, failing to break previous intraday highs. It's just also respecting this minor bullish structure, but similar to the dollar on the higher time frames, the yen still is bearish as a safe haven currency. Okay, so if we have that market optimism and we have the US dollar and the Japanese yen continue bearish through London session, possibly New York session, and we have global equities showing some more, and we have global equities, sorry, which we just have here, the US30, UK FTSE. If we can see global equities still maintain their bullish strength, as we're seeing with Asia Pacific, Australia is looking more solid, China, Japan, Dow Jones has failed to break previous lows multiple times now. FTSE, even though it's failed to test previous highs, we still are seeing some bounces from these low points with the potential to continue up if markets are optimistic through London session. So if we have that optimistic sentiment, that weakness in US dollar, we can use this for potential bias on gold buys, Euro USD buys, and USD CAD sells, as well as GJ buys because of course we are looking for yen weakness and risk currency strength, and we'll look at the technicals on GJ as well. Plus we have the CPI release in 13 minutes, which we will watch live, and if that data is good, we can see pre-London do a liquidity grab because it's still only 1:45 a.m. Eastern. We still have the pre-London hour, the actual London open hour, and a lot of time to look for potential scalp and intraday trades. So, people get really antsy. Just take a breath, relax, okay? Relax. But anyways, let's start off with gold here. Now that we understand the US dollar is weaker, now that we understand the inverse correlation between the US dollar and gold has been more prominent, right? When US dollar is bearish, gold is more bullish. And let's look at the structure here alongside our higher time frame key levels. So we can see gold has been in this intraday range for an extended period of weeks now, while also respecting this technical wedge pattern where we have seen the bullish market structure respected as well as the bearish market structure from an intraday perspective here. So this is where the bearish market structure is connected from once we have these massive sell-offs and prices coming into this squeeze. As the US dollar has been weak, sellers on gold have failed to break previous intraday lows and started to create this consolidation area and order flow generation between 1897 and 1912. You can see, even though sellers were starting to fade out their strength after these impulsive moves and we started to get buyers entering the market, we were still having buyers fail to break 1912 higher time frame key level, as well as these previous intraday highs which match up with that level. Now finally, as we had that US dollar weakness through previous sessions, we noticed that gold used this liquidity to finally break out of 1912 and at least peak a new intraday high where we are retesting bearish market structure. So now, if the US dollar remains weak through London session and possibly through New York, if we don't have any major negative headlines to bring fear and we have optimism continue stronger, especially if we have stronger economic data as well, I do see the potential to retest our key level 1912, create a lower time frame support, and take higher risk buys at a retest of 1912. Otherwise, I would be looking for breakout buys above 1923.500. At this point on, with how we have gold respecting bullish structure and sellers failing to break below previous lows, we've had this liquidity being generated for the week, and we finally broke above 1912 previous intraday highs. We have the US dollar currently weak as well. It would be ideal to get that pullback to retest these previous intraday highs as well as 1912 key level, and then have that continuation to the upside or the breakout above 1923.500. Okay. So of course, if you waited for the safer buys, you would need the dollar to continue its weakness, break above 1923.5 key level. That's another confirmed higher time frame key level. Breaking above the intraday bearish market structure and lower time frame bullish market structure, which we will identify. This would be the safer buys and squeeze to take above the point from 1923.500. Potential retest buys also at higher risk, higher reward retest buys at 1912 with lower time frame price action confirmed that we will look at when we get to that point. I do not like to play gold in between the higher time frame ranges or key levels. I like to play them at these key levels because you can see the great reactions we get around these levels. So I don't like to play in between the ranges. And you can watch previous live streams as well or previous gold breakdowns and see the relevance of these levels that are based on historical price points, and how even in recent price action you get great reactions by buyers and sellers depending on the structure. I would only take safer sells if we really had a clean break back below 1912 and the dollar faded strength. So that's why this area 1912 is a higher risk retest point, because if we snap back below structure, if Dixie goes bullish, fail to break bearish intraday structure, then we can possibly take the sells down. But as of now, when we are noticing markets are optimistic, we do have the potential, even if the US dollar does a pullback, if the US dollar does a pullback to retest this previous key level or this bearish market structure that is developing, that pullback on the US dollar would also help give gold the pullback to 1912. And then if we fail to break above that pullback area and continue to revisit the lows through later London session, that's our cue if we get the lower time frame support created to take those buys up the ranges, and then safer buys would be at a breakout above 1923.500 with these confirms. We're primarily watching headlines overnight. These are some of the main economic events, not too much to impact gold overnight. UK CPI, if it's terrible, could bring some market fear just through London session, but we will watch how that data gets absorbed and how it's released in the next 6 minutes. These are some of the key recent fundamental points that we notice more market optimism through New York session. There are stimulus talks that are progressing. As per Nancy Pelosi, there's positive trade talks during New York session between the UK and US. The no deal Brexit is being taken as optimistic. You guys can always rewind the stream to see points I've already discussed as well. But there's still some uncertainty that lingers around global COVID cases. But that's what we're looking for. And now that we understand that just on gold, we will dive in and keep our charts on the 1 minute like previous live streams. But right now we're just doing some quick intraday analysis, looking at the structure, looking at buyers and sellers' strength alongside the market sentiment and current fundamentals. Now, GJ. Yes, GJ is respecting this bearish market structure ever since this peak sell point when we had Brexit tensions first hit the market. And this upside from this low created by sellers on GJ is looking like it's more corrective, right? But right now in this recent chunk of market structure and price action, we are noticing buyers holding more strength as we failed to break below 136.500 previous intraday lows and key level multiple times now, and we do have a potential to get a breakout of this structure as the no deal Brexit didn't really get translated as negative. Like even when we had that no deal Brexit and those negative headlines that um, trade talks between the EU trade talks between the EU and the UK were done. It's not like we saw GJ do a massive gap down. We didn't see any massive sell off on it. We didn't see any strong sellers reaction. We did see these reactions to this bearish market structure in previous intraday highs, 137.2 in the key level, but that still didn't break 136.5, and we've been using that area as a support now multiple times. And at the same time, um, FTSE 100 on the UK side has been holding some intraday strength from these dip buys when investors started rallying FTSE, and we do have the potential to revisit these intraday highs where that would show us more optimism in UK markets and more positive investor behavior in UK markets, which would give GBP a boost. And of course, the yen is still fairly flat. So I am more on a buy bias on GBPJPY, at least to go retest these previous highs, and especially if we break above bearish structure. From this point on GJ, just because from this intraday price action and market structure here, I would only be looking for safe sells if we can notice sellers break below previous intraday lows and have candle closes below 136.500 and then run the ranges down. With the multiple failures of sellers to break these lows, it's looking like more sellers order flow and liquidity plus a fundamental catalyst is needed to break that price level, and that might come from a weak UK CPI, where the prior UK CPI was 0.2%. The poll for tonight is 0.5%, so we'll watch that in the next 3 minutes as well, where if that data is also good, Japanese yen is flat, we failed to break below 136.5. Even if we retest 136.500 for pre-London or London Open to grab liquidity, this would be higher risk, higher reward buy areas. And then safer buy areas, of course, would be above the 136.800 psychological price level, right? If we have sellers on GBP JPY fail to break these intraday lows and our higher time frame key level 136.5, we also get strong UK strong UK CPI data in the next 2 minutes. We also break above this intraday bearish market structure and above psychological price level 0.800, where if you are new on the stream for GJ, these numbers between the larger 100 pip ranges have great reactions on the lower time frame because they follow the quarter point theory. They are also whole round numbers, and it's also been back tested technically over a period of years that you can watch the reaction between buyers and sellers at these price points. It's not something you can trade just solely alone, but it is something you can use as a guide alongside price action and market structure, that you start noticing the reactions around these areas. So that's why I have some of these zones divided up based on these areas. So safer buys on GJ for the squeezes up to like 137, 137.2. And we'll also look at the lower time frame structure as well. Failed to break below 136.5 previous lows. CPI is supposed to be released right now, but it didn't get released yet. And then you could take this squeeze up above 0.100 easily. And then we're gonna look at the lower time frame confirms we'll need as well. We'll look at the lower time frame price action in a second. Safer sells would be below. So the CPI looks like it's just on forecast. So not too much of a, probably not going to have that crazy of an impact. The forecast was 0.5%, no? Yeah, it's a 0% change. The forecast, the poll was 0.5%, and oh, I got a 0.5%. So it's like on forecast to decent data. The Reuters poll was 0.5%. The expected. You can see all these headlines to the left here. So pre-London hourly has opened up, and this hourly has no top wick formed yet. So it would be ideal if we got that pullback to 1912 rejection, and then continue the upside with that US dollar weakness and create that top wick, and then just continue up. But we'll check that in a second. So, anyways, that's what I'm looking for on gold. That's what I'm looking for on GJ, and we still didn't dissect the lower time frame structure just yet. Euro USD. There is the potential for scalp buys if we create a technical lower time frame support. If we create a technical lower time frame support at 1.8400 key level. Otherwise, if we see some of the, and this is dependent on the fact that the US dollar will continue bearish and that German equities and Euro equities gain some strength overnight and show some market optimism, or if we get any positive talks by the ECB and the European Union speakers, which we obviously have not yet. So for Euro USD, we can start to look for a lower time frame support created at the 1.8 400 key level for potential scalps to test these previous areas of price sensitivity to the left here. But otherwise, we have seen quite extended buy moves on EU from the low points. Like 2 streams ago, we took advantage of these buys. The previous stream, we took advantage of these buys as we were playing that US dollar weakness, as we played that break of structure in the US dollar weakness again yesterday. So there is the potential for that deeper pullback to retest the structure if we come below key level. But I am more in a bullish bias on EU just because we have that market optimism, that US dollar weakness, and risk currencies are showing more strength. So now let's just take, just because EU is overextended, I want to look at some of the lower time frame structure because we might get some better potential retest points. Dow Jones, USDCAD, I don't see any good entries right now. We took advantage of the sells the last 2 streams. I would really need a retest of these previous lows and then a continuation down. And for Dow Jones, I am in a buy on DJ from our retest point that was sent to the private chat and on the last stream for multiple reasons. So Dow Jones from the start of the week here, our GJ analysis, the pullback to 137.2 is playing out. We might have potential for more optimism. Like we might get these safe buy options here. Whoa, I already said this. I said this Sunday before we even got any information. But anyways, So we got the same potential idea here, where if we get a break above 137.2, but we're adapting to around 136.8 now. Strong UK data, the Bank of England hawkish, the Brexit no deal taken as optimistic, and the Japanese yen bearish. We can see we are following our macro analysis. But anyways, across all these pairs, our analysis is playing out. But anyways, US30 for the week, what we are looking for as US stock market is very bullish. There's a potential for positive stimulus talks. Was a pullback to these previous intraday lows around 28,200 and buys to the upside. So during New York session, we of course had DJ give us that pullback and create that support. I missed this initial upside move, but then earlier during New York, I saw price come down to 28. Our buy area again failed to break, and then we also had optimistic talks regarding U.S. stimulus. Nancy Pelosi and the second and Trump's secretary had that meeting over the phone, and they discussed that they have made some progress over US coronavirus stimulus talks, and they're going to have further talks on Wednesday. This, of course, caused US30 to gap up after the market opened again at like 6 p.m. candle on the new daily candle, and we had this upside move. So I'm still in those buys myself. I'm just holding those, and I'm just going to hold them risk free here. I'll just send it to the chat. And then I'm going to be looking for potential scalps with the trade ideas I'm sharing with you guys. So in more of a buy bias on gold, just waiting for a pullback or a breakout above 1923.5. If US dollar weakness continues and we have markets more optimistic. GJ News has already come out. The UK CPI figures, they're on forecast and good. You can see UK CPI at 2 in the morning. The Reuters poll is 0.5%. The actual was 0.5% here. So that data has already come out. There's also no more European or UK economic data through the night. That was it. Just the UK CPI there. The CAD CPI and the CAD retail sales is obviously during New York session. It's still early as well, right? It's still only pre-London hours. So we're just discussing and mapping out trade ideas to start. If you guys want to know my opinion on any of these pairs, you can always rewind this stream because we've already discussed the analysis on an intraday perspective and why. And we're just going to start zooming in the lower time frame price action. We're trying to play the more optimistic markets and see if we can have equity strength continue, as well as US dollar weakness and Japanese yen weakness. We can use these confirms alongside overall market optimism to play EU buys, GBPJPY buys, USDCAD sells if we get that pullback and retest of these previous intraday lows, and as well as potential gold buys if we have that US dollar weakness and retest of 1912 and fail to break below that, or a breakout above 1923.500. So now looking at gold, let's get rid of this. We can just look at the lower time frame structure. And of course, where is the Setting this up now because I just want to look at the lower time frame now in gold. Yeah, we do this more often with the group and send market update webinars and potential trade ideas and analysis. So you can see, okay, this is where we are reacting now. This is that higher time frame / intraday bearish market structure. But we're also respecting this lower time frame bullish market structure for now. So what would be ideal is, as we have finally broken above 1912, which we failed to break above multiple times now for the past week, we have created new intraday highs. Would be getting a potential retest of this structure, coming above 1912 and then taking those buys up, or the breakout above 1923. So now we're going to watch the lower time frame price reactions, and price action on the 1 minute once we get closer to these areas of interest. Either if we come down towards 1912, I'll zoom in more so we can start looking for candle confirm entries, or if we come above 1923.5. Okay, GJ now. We have more optimistic data on the UK side. We have this bearish market structure, obviously, but what we are noticing is, even with this lower time frame bearish market structure, sellers have failed to break below around 136.4 area multiple times now. Okay, so this is starting to show us sellers exhaustion on the lower time frame, where even for the London Open, if we peaked up and came down and failed to break below again, this would be higher risk, higher reward buy entries on GJ. Okay, the safer buy entries is this sequence of events. We fail to break below these intraday lows, and on the 1 minute as well. We start to develop some lower time frame bullish market structure, right? Let's just say we start to develop we break above 136.800 psychological price level, retest it, which is also breaking above the bearish market structure, and then we take those buys up with these confirms. So we fail to break below 136.5, which is previous intraday lows and our higher time frame key level. We break above this bearish market structure. We break above 136.800 psychological price level, which is following the quarter point theory between larger 100 pip ranges, and also just whole round numbers that we've back tested technically ourselves as well. We notice the dollar and Japanese yen are bearish and equities hold more strength. And if we have all these confirms here, we'll take that 20 pip squeeze up to 137. And if we have that continued bullish structure holding, like if let's just say we can extend this structure throughout London session, then we'll just be continuing to play that up to 137.2. I would only take sells with these confirms, where right now UK CPI figures were not bad. They were on forecast. Right? UK CPI figures were on forecast. Japanese yen is fairly bearish for now, and we do not have a break below 136.500. Okay? So we're going to be watching 0.800 as a hotspot, and observing that sellers versus buyers strength, as we are noticing sellers exhausting and the potential for buyers to show us a break of structure on the lower time frame, and we could take that squeeze up with them above 0.800 here. Even if right now we start to create some minor bullish structure, And over the next 30-minute, we could take that squeeze. Just watch for that 0.800 support. Of course, we have to watch the lower time frame reactions because we've seen even when we have broken above 0.800 that buyers fail to break the 137 psychological price level, which is just 0.00, right? 0.00. So that's why we like to watch the reactions from range to range. If we get that 0.800 squeeze, we can at least take that 20 pips, and then if we have that continued respect of bullish lower time frame structure and the break of bear structure, we can extend that trade from 137 to 137.2. You get me? Makes sense of what we're looking for on gold. We'll only take really sells below this point. Makes sense what we're looking for on GJ. We're primarily in a buy bias unless we break below 136.500, where I would only really start to take the scalp sells from these ranges here below previous lows and key level 136.500. Makes sense. Makes sense. We don't have any more economic data for Euro or UK. Da, 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 da. We do have some current negative headlines from the UK housing minister talking about serious situation in South Yorkshire, but nothing too serious, nothing too crazy. And we do have some positive CPI figures. That's the beauty of it, Ryan, when you can just get that repeat. Market's always repeating. We might get this quick 20 pip squeeze shortly right now, actually. We just wanna watch accordingly, because it looks like we're developing some lower time frame bullish structure here. Nothing too crazy strong yet. We of course want to watch the reaction to bearish structure, but that would be what would be ideal. Come out, break out, support at 0.800. We take that squeeze. You can even do a minor stop below this structural point. But let's wait. Let's wait for that, right? Anybody who has questions or wants to see the trade ideas and they're asking like repeat questions in the YouTube chat, just tell them to rewind. Just tell them to rewind the stream. You know what I mean? Because the DVR option's enabled. So what we are looking to play is something very similar to last night's stream of US dollar weakness, overall market optimism, Japanese yen weakness, risk currency strength such as like GBP, Euro, CAD, etc., and our lower time frame bullish market structure. GU and GJ are exactly the same. They're very, very similar. Would be ideal for EU to break above key level, which it is doing shortly for the pre-London close, like have a significant break above, and then for London Open come retest this bullish lower time frame structure where I connected these points from this initial peak buy area where we had this lower time frame support formed and that seller's exhaustion, and we created an intraday high. So you can see we went from a low to creating a higher high on the lower time frame. Then we had this pullback and consolidation phase, and from this point we created another high. So that's why I connected the structure from those points, where if we go to create another significant high and we pull back to create that higher low here and retest structure as well as our key level, this would be a great retest buy point. You get what I'm saying? Just to continue with this overall lower time frame structure, euro strength, US dollar weakness, and market optimism. Bobby, you entered EU early. See, capital hungry private members, they got more balls. Yo, anybody else from the private Zoom want to be a YouTube chat mod? Just let me know your name in the YouTube. Oil negative. Yeah, we saw when oil went negative. We've seen a lot together. David, Kazi, you are now a moderator. I just saw you in the YouTube chat. Okay, so let's keep an eye on GJ just because we're coming towards a price area of interest for a potential trade squeeze of 20 pips. Shav, you want to be a moderator? You're a CH member. Every CH member is gonna want to be a moderator in the YouTube chat now. Yeah, I've streamed like 4 times total right now. Look at this stuff. So let's quickly let's bring up the TV here. Let's click the TV in the corner. What do we got going on? Markets are looking more optimistic through New York session globally. We do have positive stimulus talks progressing as per Nancy Pelosi and Secretary Mnuchin. I don't know how to say that man's name. No deal Brexit is being taken as optimistic. Uncertainty lingers around global COVID cases, but we need lockdowns to bring that mass fear. The economic events and calendar. We've already went through the UK CPI, which was good. It was on forecast right at 0.5%, not good or bad. So just as investors expected. And don't forget your mental reminders. You guys like that? And look at this live stream. Look at this live news headlines to the left. Dollar still continuing pretty weak, which is good for us. And we're waiting for either buys at 1912 or structure retest or breakout above 1923.5. We would only take gold sells with these confirms. These are the safer buy confirms. This is higher risk, higher reward. GJ, we'll watch it, fellas. Let's see if we can get the either breakout entries or the breakout and retest. We might be able to get this squeeze for the next 30-minute candle. We are seeing some lower time frame bullish structure developing. We just want to watch, be careful with the reactions at this bearish structure and previous 1-minute highs at 137 psychological price level. But these are the confirms we're looking for. It's looking like it's gonna bust a nut. US30 is going bullish again, so my position's good. I'm in this trade as per positive stimulus talks through. I sent it to the chat, of course. So here, U.S. House Speaker Pelosi and Treasury's Mnuchin. How do I say this name? Mnuchin. Mnuchin? Whatever. I don't care. They move closer to an agreement on COVID relief, right? So we had that towards the end of the market close. This was our Dow Jones analysis predetermined anyways, and we can see we came right to that buy level. So I'm just holding these buys. So which is we're going more bullish again on it, which is showing us optimism. Okay, so if we see U.S. futures go bullish, we see UK FTSE 100 go bullish, we're good. The way we are adapting wealth mindset is by understanding point number 1, 2, 3, 4, dot number 4, that the no deal Brexit is being taken as more optimistic. Let me just turn this TV off now quick. Yo, these graphics are sick. Yo, come on. Give your boy some credit. Look at this little TV that pops up. Who does that? Look at that. Look at that shit. Turn it off. Turn it on. Turn it off. Turn it on. Turn it off. Economic events. Bam. Calendar. Bam. Calendar. Bam. Calendar. All right. But anyway, so also safer buys on if you want to scalp buy on Dow Jones, obviously because you can't get a good entry here again, would be above 28,600. You could get that squeeze up to these previous highs, and we'll look at the lower time frame price action as well. GJ 0.800. Let's keep an eye on it. Anybody take the breakout entries? The TV. You guys can't see it on the Zoom chat. You gotta go look at the YouTube stream, and I'll show you. Tell me when you're on the YouTube stream. So see the YouTube stream. Look at that. These key fundamental points. This GJ about to bust. These key fundamental points. The economic events calendar. Quick little calendar. And then the mental reminders. Bam! For anybody that's getting tired, you're getting sleepy. All right. Let's see this. Who said, yo, Brownie? You look like you got Down syndrome. Yo, Downy. Yo, Downy. Oh, actually, I don't want to get my YouTube flagged. I don't have any disrespect to people with Down syndrome. Sorry, I don't want to get my YouTube shut down. I think the YouTube streams automatically have like a 3-second delay. Okay, let's see how this 30-minute candle closes. I know you called me Brownie. I called you Downy because I can see your picture. But I don't mean it. This is a joke. Let's let this 30-minute candle close and get a support created above 0.800. And then... Because we are reacting around the bearish market structure. We have the 30-minute candle closing. We have the 30-minute candle closing quite bullish around 0.800. I would like to close like right on it, get a minor pullback the next 30, come back above on the lower time frame, take the buys up to 137. You feel me? My IG got deleted. My IG got shut down for political propaganda. That's why I don't want to say anything, and harassment, because like your boy was mean. That's why I don't want to say anything to anybody. But y'all have some low IQ, But it's okay. You guys are learning. No, I love the market refugee chat. Let me get a "We Are Refugees." Otherwise, I'm shutting the stream off right now. No, I'm kidding. That was funny last stream. That was funny. That was hilarious. Don't forget, for anybody that's new and you want to learn, the trading styles and anything else like fundamental analysis, technical analysis, scalping, psychology webinars, full break, like these previous live streams, your boy's getting some good views. 3,600 views only on my 4th stream. I'm getting more and more each stream, which I don't really care too much because who reported me? Somebody reported me? I don't know. But anyways, you guys have all these resources for free on the free YouTube channel, as well as the Telegram and the Twitter, which posts headlines too. Tons of free resources I provide you guys. Who else provides you guys these resources? Be honest. Be honest with me. Be honest with me. I'm talking about higher time frame analysis, fundamentals, scalping, central bank, historical timelines on charts, live streaming. Who else? Who else? Be honest. So yeah, you have that. You also have the Twitter where I'm always posting headlines. Uncle Bull was a CH member. Haha, don't forget that. Your favorite streamers were probably CH members. So you have the Twitter, you got news headlines, analysis, live stream reminders, you got the YouTube channel. And then if you want more than that, then you can join the Capital Hungry private channel, right? The Capital Hungry private channel, I'll let the private members tell you about it. Like the chat moderators, there's some of the, but that's up to you guys. Yeah, let's see. Okay, this new 30-minute, pretty shitty close, like right at 0.800. So let's just let it create its lower wick and grab liquidity. And then let it come above 136.8. I wouldn't be anywhere without Paul and Raja. What the hell? You know, Paul was a member of Capital Hungry, right? But then he could never understand the information. He could never trade his own live money, and he wanted to make money from mentoring people when he hasn't even traded live for a year. He hasn't even studied the markets. All these people were Capital Hungry members. Paul. Oh, look, here it is. Here's your boy, Paul. Look, this is him, right? Paul, the guy who had beef with me. This is him. Paul, right? Paul Wiederner. Paul Wiener. That's him, right? This is him. What's this? What's this message say right there? From November 2019 from Paul. Can y'all read that in the chat? This your boy. This your boy. This the Asian hero. What's that say? What's this say? What's that say? Oh, what's this? What's all these questions he's asking me? What's this say? What's that say? What's this say? Who is this? This is your boy, right? That's Paul. That's his name. That's him asking me questions. That's your boy in Capital Hungry. That's him. That's him begging. What's this say? What's this say? What's all this say by Paul to me? Did I ask him? Did I ask him? No. Read it. Read the messages. Read the messages. What's it say? That's what I thought. That's what I thought. You feel me? You feel me? That's him thanking me for all he learned in Capital Hungry. And then after that, after not learning shit, after trying to always helping him, he went to go try to make mentorship money instead and try to go stream and try to go teach other people when he doesn't even trade live himself. He trades FTMO funded and has crashed that many times. He doesn't trade live himself, right? He just took the clout from Raja for the Asian stream, and then he went to go do that. But look, you don't see me messaging him asking for him for help, do you? You see him joining Capital Hungry. You see him asking me questions. You see me telling him great information, answering his questions, right? You see me telling him voice notes, what to look out for, what to watch out for. And now this same guy talks shit. This same guy, his whole team, his whole mentorship, his whole stream, they talk shit about Capital Hungry. Iron Man Futures is the biggest bum in the world. All right? You don't trade for 17 years and trade penny lots. If you've been trading for 17 years and you think you're the king of US30 or the king of gold, fine. You've been trading 17 years, that's a teenager's entire life, right? You are an expert on gold and US30 in your own opinion. Okay, cool. You have supreme confidence, you have supreme experience. That's right, guys? Let's add that up. 17 years experience and you have extreme confidence in the markets. So why are you trading penny lots? Right? And then you get stumped. You go, oh, wait, that's weird. That's true. Why is he trading penny lots after 17 years? Right? Isn't that weird? You know how long it is to trade 17 years? That's a lot. You know how 17 years? 17 years, and they talk about candle body longer than the wick. So this is a great buy. This is 85%. If you're claiming you have 90% win rate strategy, if you're claiming you're the king of a currency pair, if you're claiming what you do is the best, if you've been trading for 17 years, okay, why are you using penny lots? Why have you not increased your lots? Why have you not compounded your wealth through that? You know what I'm saying? The only trade I am in is Dow Jones, but I don't have Instagram, so I just send my trades to my chat. But I'm in DJ from 28,200 as per this analysis for Dow Jones was also shared for free in the last live stream last night. Remember that, guys? What we needed for Dow Jones buys. So yeah, that was shared for free. I'm just holding that position. That's it. Trust me, these people can't touch me. And Raja are just close friends, so you know. Okay, so we got this 30 at least made a lower wick. Let's see if we can come back up like what we were expecting. Let's see if we can take buys now at a breakout of 0.800. That was a nice lower wick made on the 30, and see if we can get that squeeze up. I think my girlfriend's been running a Capital Hungry Insta page. Yeah, I don't have Insta anymore. I don't have the app. It's just so distracting. It's just memes. It's just people posting Lambos, memes, toxic shit, you know? At least YouTube, I can at least provide information through this type of medium, you know what I mean? So we're around 0.800 now. I just want that clean break above and we can take that squeeze. So keep an eye on GJ. We also have London Open in 23 minutes, where London Open candle might give a deeper pullback to retest structure and then come back above. So we can be patient. We have time. Let's wait for a nice pullback or support created first. Euro USD, we're waiting for a more significant high being created, then getting a pullback on the new hourly candle for London Open to retest bullish structure, which I highlighted how I drew the structure out, and retest higher time frame key level 1.8400. If US dollar weakness continues, we can see US dollar just took a dump to 92.7, so it is very bearish still. Even if it did do a pullback to retest structure and come back down, still very bearish. Sellers are in control on the Japanese yen and US dollar, which is showing us more market optimism. But let's just keep an eye on GJ for these. I don't know. There's too many trade. There's too many marketers. There's too many people, you know? Yeah, I'm waiting for an actual breakout. Like this box is like 0.800 is right here. Like 0.800, the actual price point is right here. I should make these boxes smaller. Here, let me help you guys out. This is actually where 0.800 is. This is actually where 0.710 is. Let's go back to the 1 minute now. This is where we actually need a break above this box right at 0.800. I didn't mean to make it like so big, you know what I mean? Which we might get that on the London Open candle if we pull back and retest structure, then go back above 0.800. Take those buys. Right? Because what we're observing on GBPJPY is that sellers have failed to break 136.4 around our 0.500 key level 3 times now. This is showing us sellers exhaustion, and this is showing us liquidity being generated for a potential impulsive move to the upside if we continue to fail to break these lows, right? That's why the safe sell option would be a break of this minor bullish structure that is starting to develop now, a break below 136.500, and then a break below these 1 minute lows, and then we could take that squeeze down for about 20 pips to 136.2, right? Otherwise, right now it's still pre-London hours, so we could get London open to even do a deeper liquidity grab and come back above 0.800. We still got like 2 to 3 hours of the stream, so there's no rush. Gold, we're either waiting for breakout buys if the dollar weakness continues above 1923.500, we can ride it up 50 to 60 pips to the next higher time frame key level at 1929. Or what would be ideal is for the new hourly candle at London Open to retest this lower time frame bullish market structure, which also lines up with the 1912 key level, right? If we got a pullback, that would be higher risk, higher reward buys if the US dollar weakness continues and we break above 1923.500. What's also great to note is that, remember I was telling you guys about these psychological price levels 0, 0, 0.200, 0.800? On the lower time frame, when you're observing the price action on the 1 minute, this is where you can see the reactions the fastest and start to anticipate exhaustion, any structure being developed, any reaction, because we're seeing that even with this buyer upside move, we are reacting right at 0.800 pretty much on the dot, right? So that's why once we have buyers have a significant break above 0.800 and retest, we know we're playing with the momentum, with the lower time frame structure. We have some of that positive UK data, or was at least on forecast, and we can ride that squeeze up and watch the reaction around 137. And if we remain above bearish market structure, we can continue it up, you know? Swiss franc is undervalued. Most safe haven currencies are undervalued. Yesterday's London was pretty slow, but we still did get like 30 pip EU buys. We got multiple GJ scalp trades, the initial sell scalps, then the 0.800 buy scalps. Most safe haven currencies are undervalued as markets have been more optimistic, like the Japanese yen, the US dollar, and the Swiss franc, compared to the value of risk currencies. Especially like they were very inflated when coronavirus first hit the markets, but then when the central bank started printing out stimulus and injecting their money markets, and we saw global equities do that v-shaped recovery, and we had that period of optimism, for example, just before we had the negativity hit toward in October and towards end of last month, we were riding Euro USD buys. We were riding these GJ buys for an extended period of time. Like this structure here, we were playing these buys for a month. Same thing with Euro USD. We were playing that recovery after the crash for a month. So when markets were optimistic and we are doing that recovery on EU, GJ, GU, AU, it doesn't matter, the risk currencies versus safe havens, at that time, the Japanese yen, the US dollar, and the Swiss franc were very bearish, right? They were very undervalued. Now they're just starting to pick up some strength intraday, but it's nothing like to change the higher time frame structure. I just got to go to the washroom though. But yeah, quick reminders of some of the key fundamental points. Economic events have passed, the UK CPI, which is on forecast. And then, your mental reminder. No confirms to buy GJ just yet, as we did not have a break above 0.800 or the support created. No, this is not we would need the support above the 0.800 psychological price level, right? So now it's best just to wait the 15 minutes for actual London Open to see if we get that pullback to retest structure and then continuation up. And we're playing these potential trade ideas. Gold coming towards 1923, so watch for a potential breakout and squeeze on there as the US dollar still weak. UCAD, we would want a retest of this broken previous lows to continue down. But yeah, I gotta go to the washroom. Sorry, I just had to go to the washroom. So obviously, yeah, we did not get safe confirms to buy a GJ as we have not broken above the 136.100 psychological price level. We rejected there on the dot. Your if you sign up for Capital Hungry, if you sign up for Capital Hungry private chat, it runs 30 days from when you sign up and pay, just like any subscription. Best now just to wait the 9 minutes for London Open. This would be very high risk, high reward buy entries, but not. I think London could do a deeper pullback um to 0.500 anyways, and we would only take safe sells below these 1 minute lows. So let's just keep an eye on GJ. EU, we want the new hour to give us that pullback anyways, come back above. US dollar stays weak, we can run that scalp back up. Dollar is still fairly bearish. Yen is still fairly weak. FTSE 100 is holding some strength, and equities are holding some strength. Dow's not moving too much. I'm just holding the US30 position, and then looking for any of these trade ideas that set up as well. Reacting to that structural point on the dot pretty much, and then 8 minutes till actual London Open. See how it grabs liquidity and sets up for any of these potential trade ideas. Now we just patiently wait. So if you guys have any questions about market structure, about what to look for like on the lower time frame, about any analysis, just leave it in the chat. I'm just gonna go fill up my water bottle, and then I'll answer those questions when I come back. Just leave it in the YouTube chat, leave it in the Zoom chat, and we can break that stuff down. Oh, let's look at US30 lower time frame as well. Failures to break similar levels. We are getting some exhaustion on the US30 right now, just before London Open, but it's still only pre-London. Let's see how it runs. I'm just holding the same buys risk-free, so it's all good. So the only thing I wouldn't want to sell US30 is because we did have some positive stimulus talks towards the end of New York session. That's why US30 gapped up and pushed up a bit through Asian session as well. No, I don't trade. I've never traded the Elliott wave theory. Sorry, just got some messages here. GJ does a fake out. No, GJ's just doing a pull. GJ's like this is only like about 10 15 pips, right? It's just doing a pullback here. It's just retesting structure before London Open, it looks like. What's this guy want? No, I don't do one-on-ones. I just have a capital hungry private channel. No, you could just go join something else for 20 bucks. That's why I have all these. If you can't afford capital hungry private, then like don't join it. I've never done a sale. I won't decrease the price, because there's a reason why the price is at $100, because we offer a lot. It's too much to talk about, and I'm tired of repeating myself about it. I just want to wait for these trade ideas. Today have big GBP news. Which one? I'm just watching the buyers versus seller strength and how GJ buyers are reacting to this bullish structure and failing to break lower right now. And if we could get another retest on the London Open and then come above 136.8, we'll still get our squeeze. I would only take sells if we break below this bullish structure, fail to break the 0.800 highs like what we're seeing, and we come below 136.5. Yeah, like for one of the reasons is like we have a news terminal which costs $1,000 a month in itself. You know what I mean? So we have like a news terminal. We have session reminders. We have session reminders. We have key level price alerts. We do constant webinars every single week. Every single week we follow the same process of sending our mentor reminders, so reviewing a psychology webinar, doing a weekly recap and refresher webinar. Every single week we do this, sending out what economic data reports we have and fundamental events we got going on, a news briefing, political and central bank speakers, market sentiment read, analysis across pairs where we already had the gold upside to 1912, right? And then the trade room, all the stuff you get in there, then the newsroom as well. Then, for example, you get access to all these educational webinars across fundamental and technical topics. And you get access to 200 other webinars of analysis done on pairs, price action sessions, market update webinars, right? That's why it costs so much. Like these are webinars on fundamental topics, psychology, different technical topics, how you can use this information for a trading edge for yourself. That's what I mean, right? People keep asking me, getting annoying. And then on the actual Vimeo, like if you go to my videos, there's 217 there's 217 webinars for the private channel, from market update webinars across pairs to weekly recaps to like pair to breakdowns on different pairs. Richard, JPY is right here. Japanese yen index. I only look at the indexes for the safe haven currencies, and I don't really trade Swiss franc, so I don't look at like the Swiss franc index, but I do look at like primarily I have it on a triple view, where for my market sentiment I'll be looking at the dollar index, Japanese yen index, and the volatility index, which tells me information about North American investor behavior. But through London session trading, I'll be watching Japanese yen and the dollar, especially because I'm trading like EU, UCAD, gold, GJ, right? You don't really need to look at the GBP index. You don't really need to look at the index of risk currencies because they're the primaries in the quote. Right, but yeah, 200 webinars, live price action sessions, market updates, etc., etc. 200 webinars, 40 educational webinars, and all the information provided in the chat. It's too much to talk about for me. So if anybody, some of the capital hungry private members can tell you about it. But yeah, let's just see what happens at London Open now. Coronavirus headlines for the UK. Okay, so London Open. Let's just see how the hourly candle closed. This hourly has already created a minor small lower wick. We are still respecting that bullish structure. If we can get the breakout and retest above 0.800, it would be ideal, but still the exact same trade bias stance. Very, very nice so see what I mean when you can see the reactions on the lower time frame first? Like that was a higher risk, higher reward entry, like I was telling Mr. Potts. Like you could already, that was already a 15 pip scalp. But let's watch the reaction at 0.800 as we need the momentum to break above, retest, and then we can take another 20 pips up. But on the lower time frames where you can start to identify the structure, you can start to identify where buyers and sellers will react, right? That's why I drew this out to see if we start to hold that structure, we can continue the move up. And that's why for safer sells, we would need a combination of confirmed, such as break below structure being one, failing to break 0.800, right? Coming back below 136.5, and then yeah, we could run those ranges down. But otherwise, we are looking like more in the buy bias. We are just reacting at 0.800 again on the dot, so always interesting to watch the reactions. Oh, Fahad, yo, you took that. That's high. I don't expect that from you. But you got a quick 10 pips. Just be cautious because we're reacting right at 0.800. The private chat's more experienced. You guys took the retest of structure here. Up 10 pips, retest of structure, GJ pulling back to structure. 1 minute's beautiful, right? Just be cautious as we are reacting right at 0.800. So, you know, we did not break above just yet. We still need this for the safer buys. Gold hourly still looking quite bullish. We didn't get that. We didn't get quite as deep. US30 is also grabbing liquidity for this hourly. I'm still holding the same position. I don't mind because this hourly candle doesn't have a top wick yet on the US30, so it could just be grabbing liquidity. I'm just gonna hold it risk free. Yeah, GJ, just be careful because we are still reacting right at 0.800 psychological price level in this previous 1 minute highs on the dot. So that could have been a liquidity grab. And if we break below structure, you know that we don't have the, you know that we're not as much of an a buy bias anymore if we break this lower time frame structure, right? Because that's a hard rejection at 0.800 again. It looks the hourly just created a top wick right at 0.800. So not too confident about those above 0.800 buys at the moment. We might need to adapt to some sells below 0.500 as that looked like quite an aggressive liquidity grab for now. We would still need these same confirms for the sell anyways. We would still need a break below structure and a break below 0.500. We still have the first confirm. We still failed to break below 136.5. We have not broken above bearish structure. We have not broken above 0.800, and markets are fairly mixed right now. So we do not have the confirms we need for those buys. Dollar is still looking fairly weak. Let's just do its thing. Let it grab liquidity. If it still doesn't break the structure and comes back up again, we still have the same trade ideas we're looking for. EU had a nice candle close above key level 1.84. So if we get a retest of the structure on the lower time frame in 1.84, we could take some continued buys up. Otherwise, I don't see any entries as of now unless you were already in. Gold hourly is looking quite bullish still. We didn't get as deep of a retest to 1912 as we wanted on these previous key levels here. It would have been ideal to get a retest right at the key level, but US dollar is looking flat. So these same trade ideas stand. Either we wait for a clean breakout above these 1 minute highs in 1923.5 and take that 60 pip squeeze up, or it would be ideal for the hourly candle to do a pullback to 1912, retest bullish structure on the lower time frame. This would be higher risk, higher reward buys. This is the safer buy option. I would only take sells if we broke bullish structure, dollar went bullish, We came below 1912 and we came below the structure, of course. I would take the sells. Otherwise, I'm in a more buy bias. I'm just waiting for the confirms to build up. US30, I'm just going to let it do its thing. If I get taken out risk-free, that's fine. I wasn't looking to scalp it anyways. And I'm just going to let price action develop now. So this is still a good sign that we didn't break bullish structure yet, and we're just generating liquidity here. We're not breaking previous lows just yet. We don't have too many crazy headlines or anything coming up in the news terminal. So still markets are optimistic in my opinion. Yeah, we still got 2 3 hours anyways. I think his talks about COVID measures might bring more optimism. I think he's going to be like Trump and start saying we need to go back and open up the economies. We need to rebound the UK economy. We need to get people working again. A lot of the politicians in North America have been trying to downplay COVID's impact. This is good now. This is nice that we had this pullback, didn't break structure, and we just needed to grab this liquidity because we obviously I don't want to jinx it. Once we get that squeeze out of 0.800, we're taking that we're taking that 20 pips up. If US30 is just if US30 doesn't break this area, you're taking buys up. I'm in buys from down here as per some intraday analysis. I'm not looking to take any more entries. Um, I'm just gonna let it cook and do its thing through London session, see how it runs through New York. We is tomorrow's Wednesday, right? Yeah, so there's more stimulus. Well, today's Wednesday. Through New York session, there's going to be more stimulus talks between Pelosi and Mnuchin. I don't know how to say the guy's name. Is it Mnuchin? Yes, Tim. I like the way you just said that. Let's see how price reacts. Don't do anything impulsive. Let's watch how buyers and sellers are reacting on the lower time frame. Do we have enough order flow now after that pullback to break above 0.800 and get a buy squeeze to 137? Let's see. I don't want to jinx it. Every time I say it's going to break higher, I jinx it. We'll zoom in on the 1 minute candles when we come to our areas of interest. Right now, I'm just going to keep it like this. But if we come down to 1912, we'll zoom in. If we go above to 1923, we'll zoom in a lot more. Dollar is still bearish, so that's good that we can play that US dollar weakness sentiment, which should help us with further EU buys, UCAD sells, and gold buys. UK equities are a bit slumped. Market's fairly mixed right now. London session so far is a little bit quieter. Here we go. Here we go. Actually, I don't want to jinx it. See, as soon as I clapped, it rejected 0.800 on the dot. I should have. It looked like it was about to do a big breakout. But just because we're not getting the trade set up doesn't mean you get stressed out, doesn't mean you get emotional, doesn't mean you get angry, because everything we're watching in front of us is a learning experience. It's not like we're just seeing GJ do random shit right now. It's reacting to that in this $1 trillion market. We're watching price react to structure on a refined level. We're watching it react to these psychological price levels. We're watching it react to these higher time frame key levels, right? So it's all a learning experience when you're watching the buyers and sellers reaction and you're seeing things play out over and over again. And once we do get these confirms, I think it's now. I think it's about to bust. I think it's about to bust. Yeah, that was my jinx, Nix. That was my jinx. It's about to bust now for sure. That was my jinx. That was my jinx. 60 pips on the US30 call. Yeah, it's dumping a lot deeper, but I'm just gonna, like I said, I'm just gonna let it do its thing. I'm risk free. I already took a couple trades yesterday on the live stream, so I was okay. I'm just gonna let it do. I'm just gonna let even if it comes down, take me out risk free. That's okay. I wasn't looking to enter anything in between these intraday lows or 28,600 again. Anyways, I would have, even if I was in these entries, I would still wait for secondary entries above 28,600. So yeah, like I'm in from over here, right? Worst case, I'll make 500 bucks still, which is a lot more than I like. I'll close it at 500 bucks worst case, which is a lot more than I used to make at my job in a day, in a full 12-hour shift. So you gotta appreciate it. Can't get greedy, can't get emotional. You gotta have a realistic point of view and mindset. Obviously, obviously, it's not something nice to get taken out at break even or lose a chunk of profit, but it's out of my control. The US30 wasn't risky just because from the start of the week, this is October 18th, right? The start of this week. I already sent a market update webinar to the Capital Hungry private chat, which was 40 minutes long, of what to look for on US30 for potential buys. So this is before the week even started, right? You can see we got a pullback to these buy areas that we already predetermined. Um, later in the week, and we had the positive stimulus talks. Remember, we had the positive stimulus talks during NY session between Pelosi and Mnuchin, right? So that is why this buy was looking more appealing to me. You could either enter on the breakout candle itself if you want the impulsive squeeze, or wait for the breakout and pullback retest on the 1 minute. Um, the same confirms that I shared in the scalping webinar series. If you guys want more information on what I look at on the lower time frame exactly, you can watch the scalping series part 1 to 4. And if you guys want to know what trades I'm looking for on like gold, GJ, EU, or anything else, you can just zoom out and take a look at that. I'm sorry, you could just rewind the stream and go when we're doing the analysis. But gold, I'm only taking safe buys at a breakout above 1923 for a scalp, or a pullback to 1912 to retest bullish structure. GJ, we're getting the breakout right here on 0.800, but we are reacting at that intraday bearish market structure on the dot now, but it's looking good. I don't want to jinx it. EU, I'm just gonna let EU do its thing. Some people took buy scalp, at 1.8400 key level for 23 pips, but I'm just gonna let it peak a new high by buyers, and then as we've seen many times before, from peak points, when it does peak new lower time frame intraday highs, you either have a pullback or a consolidation phase. You either have a pullback or a consolidation phase to generate order flow in the market. And then if it doesn't break structure, a continuation with the trend. So a new high was created here. And now, obviously, we didn't get the pullback we expected. So I just extended that structure from these higher low points. The base, then the higher low. So if we get a deeper high created and a pullback, I would be looking to take those buys above 1.8400 to a new high and play that structure as long as fundamentally US dollar remains weak. Where are we here? Sorry. So that's why that Dow Jones entry wasn't higher risk for me because it was already following predetermined analysis from the start of the week, and we had fundamental confirms of U.S. market optimism from those positive stimulus talks towards the end of New York, and the confirms on the lower time frame as a support was being created from this point as well. And the rejection was on a dime, right? So if it comes back to take me out, though, there's nothing I can do about that. Very, very, very strong reaction to that bearish market structure from an intraday perspective. So now, yes, we're respecting structure. We failed to break below 136.5. We are breaking above 0.800. If you have initial breakout entries to extend this trade, we would need the break above this structure, which is what still good. Still, we're about to get. If anybody entered at the actual breakout of 0.800, at least you almost got 10 pips, but just watch it accordingly for that scalp. I would like to go up to 137, but we're reacting at that. We're reacting at this intraday bearish market structure on the dot right now, where we will face some seller sensitivity. Once we break above there, if we clear that, we have easy ways up to 137 and 137.2. You get what I'm saying? But we are facing some price sensitivity here for sellers. So just be cautious of that. Gold, we're still waiting patiently. As per headlines, I don't see any political speakers right now. I don't see any high volatile headlines. Market conditions since yesterday, for London session anyway, has been a bit slower. Like London volumes have been a bit slower and less volatile. We've seen primarily London range a bit more and generate order flow, and then New York have some more impulsive moves. For example, like the EU buys that we called in yesterday's stream, the gold buys, the initial breakout, and the UCAD sells and the Dow Jones buys played out great through New York, even though we did the analysis during the London session. But it's great. It's very interesting when you're watching the 1 minute. Always remember to zoom out. Don't get so seduced by the 1 minute. Just look at the reactions. Take price action for how it is. This is a very strong rejection so far at that bearish market structure. It's not giving me the most confidence that buyers can extend this move up unless we get another pullback or we get a support made at 0.800. Would have been ideal to get the breakout above the structure point, then get the retest at 0.800, then continue up, but we rejected pretty much there on a dime. So best to wait now. And then, yeah, we were expecting the pullback anyways, but I do not like this rejection at that bearish structure. Like, that's what I mean. I don't like that very strong rejection there on the on that hourly structure. So GJ is just in a bit of this like 15 to 20 pip range right now. So let's see how it reacts around this level. If it comes down to retest structure again and breaks lower, and we notice more seller strength in GJ as we failed to break above that bearish intraday structure and coming back below 0.800. because we still wanted all these confirms for the safer GJ buys. The breakout above bearish intraday structure, the breakout above 0.800, the retest, and then ride it up. Let's watch how this this 30-minute candle in the next 9 minutes has the potential to close below 0.800 and the bear structure, which is also not a good sign. That's multiple rejections on from the pre-London candle. That's a rejection from the London open hourly candle. That's a rejection on this 30-minute candle as well. That may close in the next 9 minutes. But let's just watch what happens around 0.800 because we are still respecting lower time frame bullish structure. We just can't ignore. Sorry, I didn't mean to do that. We just can't ignore this bearish market structure, of course, from the peak sell points. That's where we are reacting to right now in this intraday range from about 136.5 to 137 that we've been in this range for a period of time now. But if we can come back above 0.800, maybe that was just a quick pullback. Like I still want that squeeze up to 137, and I'm still confident in that squeeze if we break above there. Let's keep going so high. This is a nice little pullback and retest, but let's wait for the 30 to close. Unless you're already in, but I'm waiting for let's wait for the 30 to close. I personally advised once we had that rejection here to close and wait, just because that was a hard rejection at that bear structure. And we're just in this 15 to 20 pip range. And we might get the trade set up. We might just get a liquidity generator for a period of time and then get the trade to play out later in the session like it usually happens. So no rush, just have some patience. Gold also not doing much for the last couple of hours. Just been going up and down about 30 pips. Euro USD getting a bit messier now as well. Nothing too significant. UCAD is giving us a potential pullback to those previous lows. Dow Jones just playing around. Nothing too significant yet. Dollar is still bearish. Yen is still weak. Equities, though, are exhausting. So markets right now, as per sentiment, is fairly mixed, right? We don't have one-sided market fear. We don't have one-sided clean market optimism. Right now, we are seeing more of a fundamental mixed tone, which is creating some technical ranging and indecision. When you have fundamental indecision and when you have a mixed sentiment, you notice that buyers and sellers react more aggressively on the lower time frame to previous areas of price sensitivity or structure points or key levels. When you usually have one-sided volatility and one-sided market sentiment based on fear or optimism, there are less reactions to minor zones. Price usually goes from a higher time frame key level to another historical higher time frame key level in 50 to 100 pip ranges. There is less reactions to every minor zones 10 or 20 pips on the lower time frame, if that makes sense. But when you have indecision and markets mixed, sentiment mixed, you see more reaction to previous minor highs and lows, where let's just say we had more optimism and we had the UK CPI was double the forecast. And then you had Boris Johnson give optimism through a speech about Brexit or about coronavirus optimism. There we would see less reaction at these minor levels and more impulsive buyers moves and continuation of the trend and structure, right? But when you have indecision and you have your risk currencies and safe haven currencies mixed, you have mixed headlines, you have your equities taking a bit of a hit. This is what's creates more aggressive reactions to lower time frame zones and areas of price sensitivity. But right now, obviously, we did not get the confirms for all of our safer GJ buys. We are getting a potential 30-minute candle close below 0.800, but we would still need these confirms for ourselves anyways. We would still need failures to break these highs. We would still need a failure to break the bearish structure, which we got, coming back below 0.800, breaking bullish structure, and then below 0.500 would be safer sells. This would be higher risk sells at a break of the structure down to 0.500 for the 15 pips. But we're just playing between the lower time frame bullish structure and the intraday bearish structure right now, coming into a bit of a price squeeze as we have that fundamental indecision and no real one-sided buyers or seller strength cues just yet. Okay. So we had the failures to break 136.5. We did not get the break above bearish structure. We did get the break above 0.800, but not a clean break above the structure. And markets are not optimistic. They are more mixed right now. Dollar's also giving us that pullback from that key higher time frame area, and those new lows peaked. But it's just reacted to these previous low points. UK equities are taking a hit. Asian Pacific equities are looking more solid. China, Australia, Japan. North America, UK, and Euro are looking a bit weaker now. But still, we have that overall mixed sentiment. Gold from current price, we are getting a support formed. We do have that US dollar weakness. Above this structure here right now would be higher risk buys to 23.5. Safer buys is these confirms. We start checking off these confirms if we get them. You know what I mean? I'm personally waiting for a pullback to 1912 and a retest of structure, or this for gold. And I'm personally waiting for either this for GJ or to be able to check off all of these confirms for buys, which we do not have just yet. Euro USD, I'm just letting it do its thing as it's just going up and down 5 or 10 pips, and waiting for as we have had buyers break above higher time frame key level. We do have buyers creating intraday highs and lower time frame highs, and in an ascending bullish structure. So what would be ideal for EU is a pullback to structure and a break above 1.84 to take further buys. I'm just waiting for that as well. UCAD, we are getting the retest of previous intraday lows and noticing some minor rejection. As we're still in bearish lower time frame structure. But overnight tonight, markets are fairly mixed. We have some we have some Brexit headlines right now. The EU Council President Michael says on Brexit, "We cannot have your cake and eat it." What the fuck does that even mean? What's that even mean? President Michael says on Brexit, "We want a deal not at any cost." Yeah, I just saw that too. You should have you should have closed when I told you to close at that rejection. You should have closed here, but it looks like we're still coming back up to 0.800 right now, so don't worry about that. It's just playing games. We needed all these confirms for those bigger buys. You know what I mean? For those extended buys. No, the EU Council says we cannot have your cake and eat it. You could just take a quick like 3-4 pip loss right now, but you should have closed when I said we were rejecting the bearish structure. Yeah. EU pullback, GJ pushing. Trust me. Like it's best to stay out of GJ in this little range right now, as we did not get our clean safe buy confirms. We don't have our safe sell confirms. But if you were in at 0.800, you should have closed when I said we were getting strong rejections at that bearish market structure retest, because we're just playing between these lows and these highs right now, and we have that fundamental indecision and technical indecision. That's why you just have to be very objective and not go based on what you hope happens or what you want to happen just because you're in a position. You have to go based on what you see, and we already had this bearish structure highlighted. We already knew we needed a break above bearish structure to continue the buys, and we had a very solid rejection there on the dot that you cannot deny, right? So when you're looking at it subjectively, in when you're in a position, this is probably and you're in at 0.800. If you don't want to take a 10 pip loss, it's best just to close and wait, because it's just messing around right now. We could still take buys above 0.800 break and retest, but to extend that, we will still need a break above the structure, and then we'll get that squeeze to 137. Okay, because it's just generating liquidity. If you guys have noticed the last couple of London sessions, London does just range a bit more and generate liquidity, and then we see New York have some more impulsive moves. This isn't always the case. It's not like London always ranges. Sometimes London has great, very clean, great impulsive moves. But when you do have that fundamental indecision, you have markets more mixed. When we're looking at equities, when we're looking at the US dollar, Japanese yen, you don't want to fight it, right? But if we come back above 0.800 here, I might take that buy squeeze up myself. What's Dow Jones doing on the lower time frame? Looks like it's making a bit of a lower time frame support as well, generate some liquidity, flat candle body support. But I'm just holding the one position there. Gold, just rewind the stream to see what the gold analysis was. I'll probably be holding Dow Jones until like New York, anyways, unless it takes me out at break even. So I'm like down here, set at break even, so that's all good. Just following that intraday analysis. The intraday analysis for Dow Jones buys was also shared on yesterday's stream. If anybody wants to recap that. Okay, GJ, was that the liquidity for us to get our breakout? Let's try it again, round 2. I don't want to jinx it. Oh, wait, my girlfriend's calling me. No, never mind. False alert. I already missed her call. She's probably sleeping now, so it's all good. This 30-minute already did create its lower. Okay, at least the last 30 closed bullish. This 30 did grab liquidity, failed to break structure. If this candle, if we now have a 1-minute break above 0.800 where we are now, we should push up to 137 and test these previous highs now. That should be enough liquidity generated. Nobody should have taken a loss on GJ. Worst case, you should have got break even. Right? It only went like from 0.800, it only went like 8 pips below, and it went 10 pips above, 8 pips below. You know what I mean? Just messing around right here. And right now you'd be at break even, but let's see if we can get that impulsive move. Because obviously we saw that buyers rejected at this point because it's an area of seller sensitivity and bearish market structure on the 4-hour. So this pullback was to generate more buyer order flow to potentially break these highs, as this pullback failed to test previous lows or bearish market structure for now. Okay. Of course, the safer buys would be above the bearish market structure. You could still catch about 14, 20 pips easily, but right now it's also good as well. Or if you were already in, it's just messy. It's just not we're not seeing clean impulsive moves. But let's see. Gold is just messing around, going up and down. going up and down 15 pips, playing with people's hearts. US dollar, some nice exhaustion so far. Dollar is still bearish. Yen is still flat. UK equities are coming to react to previous intraday lows. Very solid rejection at these previous higher time frame levels and intraday highs, 59.15. Don't forget, bam. Economic events have passed. The UK CPI was neutral. Some of that data through New York session. Markets are still mixed. Brexit is still fairly mixed. We did have the positive stimulus talks and trade talks, but let's just see how London runs now. I'm just going to go to the washroom. I'll any questions in the gulag chat, just or the market refugee chat, just wait and I'll answer them. And GJ, let's just wait for a break of the structure because like it's just messing around between these lows and the 0.800. Or if a support is created right at 0.800, like right now, these flat candle bodies. 1 second, BRB. I gotta drop a deuce. I am only in Dow Jones. I might take the scalp right here. Not on Dow Jones, but I'm holding Dow Jones till probably New York. Scalping, looking for 10, 20, 30 pips, depends. But usually if we're scalping GJ and we're going from psychological level to psychological level following the quarter point theory between the 100 pip ranges, you usually have 20 pip runs, like from 0.00 to 0.2 to 0.5, which is a 30 pip obviously, to 0.8, etc. Right? Okay, yeah, but yeah, any questions, anything else? I'm gonna read the chat in a second. I just gotta go to the washroom. Anybody have any questions in the private Zoom? Just let me know as well. If you guys want more information, follow the Capital Hungry Twitter. If you guys want news headlines, market updates, analysis, etc., these are not as many news headlines or as detailed as the Capital Hungry paid newsroom, but still very useful for free, right? More information, and if you want to see how we scalp trade, intraday trade, we have a bunch of other streams. I've only done 4 streams total. This is the 5th. Scalping 101 series, psychology webinars, fundamental analysis, technical analysis, how I do analysis, everything. And if you want more than that, you can join the Capital Hungry private chat for the tons of features that are offered in there, right? All right, sorry, I was just in the washroom. Oh, the hell, GJ is just messy right now. Honestly, the amount of rejections and how it's just playing in this range is not too appealing. Yeah, I ended up closing Dow Jones, like I said, to take some profit because we're getting a hard pullback there. GJ, I'm not really too confident in the buys as of now, just because of the amount of rejections there, and we have some Brexit headlines active as well. But 0.800 above it still does look good because it's hourly is closing quite bullish, but it's just messy right now. What else we got going on? Yeah, retesting 0.800 right now. Actually, sorry, I just look at the screen. Gold's this London session is trash. Gold been going up and down 12 pips since for the last 3 hours. EU Council President says on Brexit, UK has a big decision to make. Euro USD just going up and down. 8 pips for the last 2 hours. UCAD stalling right now. Dow Jones I closed. Trying to catch GJ right now. Let's go. Let's go, GJ. Come on, come on. Actually, every time I say that, I jinx it, so I'm not saying shit. Go to 137. Go to 137, baby. Pop for us. Hourly candle close in 8 minutes. Yeah, GJ, let's see if we get this 20 pips, baby. I'm not jinxing it. I'm not jinxing it. You guys are still in, right? GU is cleaner with the US dollar weakness. I closed Dow Jones for $700. Fuck is this guy saying? I'm gonna work harder than everyone. All right, let's go, baby. Let's go, baby. Just tap 0.7, 137. Keep teasing the gang. All right. 20 pips. W's in the chat. W's in the fucking chat. W's in the chat. I'm taking it. I'm taking it. I'm getting out. I'm taking my money. I'm taking my money. I'm taking it. I'm taking it. 137 tap. Take that 20 pips. It might go up higher, but I don't give a shit. I'm taking that. I'm taking that. All right. Beauty. Who the fuck is this guy? I took the same trade just like you guys. Entry at 0.800 area here, give or take 3 pips. Took the scalp up to the next range, 20 pips up to 137. hit that 137. I closed for $240 on the one, $240 on the one position, $350 on the other position, plus $700 on Dow Jones. We plan, we analyze, we fucking execute. Who be doing it like that? Who be doing it like that? Oh, fuck the horn. All right. We got exactly what we wanted to look for. Great job, Vlad. Beautiful trade. It looks like it's going to go. It looks like it's going to go a bit higher. So, what did we do to look at this trade? Well, right now we also got the positivity of some Brexit headlines, right? And we're observing the strength between buyers and sellers and playing between the quarter point ranges. Okay, so what did we have here? Initially, a fail to break these lows by sellers, right? This is sellers exhaustion. Right? We come above our higher time frame key level and use it as support. Correct? It looks like we're going to go to 137.2 to be honest, but I took it. Right? We started developing lower time frame bullish structure. Oh, GJ. Oh, GJ. I already closed though, but all for you guys. You know what I mean? 0.200 is coming. 0.200 is coming. We broke and retested above 0.800 PPL. Right? This was the pre-planning. Markets were mixed, but they just became optimistic. Markets were mixed, but they just became optimistic from those Brexit headlines. Japanese yen, bearish. Break above 136.800? Yes. Break above bearish structure? Yes. Fail to break previous intraday lows? Yes. Yes, shit was messy. Yes, we were getting hectic pullbacks and rejections. But even though we were getting the rejections to the upside, did sellers break below price sensitivity areas? Did sellers break below bullish market structure? Did our bias for buys break? No. Did we have the confirms for the sells we wanted? No. Right? So by understanding the intraday structure, by understanding how markets were optimistic, by understanding some of these key fundamental points that the no deal Brexit has been taken as optimism and how we have more positive Brexit talks that were coming out in the real-time headlines. I wonder if this gave UK equity still dropping though. But that understanding that markets were more optimistic through New York, that we have the no deal Brexit being taken as optimism. We also had our UK CPI was positive or at least on forecast, right? And we had all of the confirms we needed from the start of the stream. And where are we reacting right now in this $1 trillion market? Tell me the exact price we're reacting. Why did we just go from square to square? And we're about to, huh? That's what I'm talking about. These are the psychological price levels in between the higher 100 pip ranges. Yes, sir, Alex. Tell them in the chat. Stop loss would have been below these structural points. So anybody understand? Does anybody need any more clarification about the planning on the GJ buys, the execution, the observation of buyers and sellers' strength, the observation of structure, etc., etc. Damn, GJ is busting a nut. 34 pips in the almost choked on the water. Oh, shouldn't have tried to cheer and take a sip of water. Oh. Oh. GJ busted on me. Oh, you're right. Come on. Somebody said, "Are you okay, bro?" People are making sure my safety and health is good for these streams. 137.2. 137.2. 137.2. Ah, close enough. Close enough. We'll take that. And what did we say? If we break above 0.137, we can extend that trade up. I personally took my money, same entry as you guys, same reasoning as you guys. This isn't no FTMO funded account. This isn't no demo account. Same broker as your guys' hero Raja Banks. All right. Dow Jones, I closed as that was an aggressive pullback, so I'd rather take $700 than $0. 0.800 entry, just around there. Made $600 there. $1,200 for the night. CH private member, exactly 0.800 to 137 on the dot. TP smashed. $1,100 trade. Beauty, beauty, beauty. 0.200. W's in the chat. W's in the chat right now. I'm tired of y'all. I'm tired of y'all doubting Capital Hungry. W's in the chat. W's in the YouTube chat. W's in the live stream. What's this guy want? I'm just gonna say I'm gonna work harder than everyone in the room. Oh wow, look at that beautiful. Oh my god. Come on. Come on. Come on. Come on. On the dot. Where are we reacting to on the dot? It's fascinating. This should fascinate you. Yes, we took a great trade, right? But it should fascinate you where price is reacting and why it's creating these reactions at these points, these price points. This should fascinate you. This should intrigue you. You should backtest this. How are you at break even? Oh, you overtraded. Oh. Refugee chat, refugee chat. Refugee chat got some food tonight. No, the stop loss would be below the structural point, these 1 minute lows. If you guys watch the Scalping 101 series, the 4-part series, it'll talk more about stop losses and targets and all of that as well. But the stop loss would have been below the 1 minute lows and structural points. We've done 5 streams. Who's been here for all 5 Capital Hungry streams? Huh? Who can hands up if you've been here for all 5 Capital Hungry live streams so far? Have we taken a loss? Have we taken a loss? Have we taken an L? Have we taken an L? I don't know. Have we taken an L on any of those streams? I don't know. I don't know. I don't think so. I don't think so yet. All right, okay, let's simmer down now, because what would be ideal, right? It's 4 a.m. right now. That was a beautiful trade. Let's chill. We're getting reactions at 137.2. Let's remember to understand what we are looking at, right? We are still this hourly candle on the close your entries on GJ. We'll get another pullback pre-New York, okay? This hourly candle has no lower wick, and we are still rejecting by buyers at previous intraday highs and our higher time frame key level on the dot. Okay? So now let GJ do its thing, let it grab liquidity for the next 4-hour candle or the following hour candle. Exactly. The 4-hour pullback, if we can come back to 0.800 again and hold structure, guess what? We're riding that back up. because this four, I don't want to jinx it. This 4 hour candle is closing quite bullish. It is engulfing a lot of these previous candle bodies. This was buyer side liquidity as we predetermined already. So we are breaking above that bearish market structure. So now let's just be patient. Let's just observe the structure. Put the news headlines back on. Let's take a look at what our other pairs are doing. That's what it's all about. We're using fundamental analysis on a micro perspective. So all those people that are saying, "Oh man, fundamentals are fucking trash, man. Technicals fucking it's only technical patterns and all this shit," right? Oh man, you can't do both. Oh, one versus the other. Blah blah blah. I'm ignorant. I got a caveman brain. I'm a monkey. All those people who are saying, "How do you use this information to scalp?" or "How do you like use all this information together?" We've been doing that the past 5 live streams. We've been watching news headlines and watching their impact. We've been understanding market optimism versus fear. We've been looking at market sentiment and the flow of money, like dollar still bearish, yen is bearish. Equities are taking a hit on the UK side, just doing a deeper pullback, but they're still bullish. Like when you really zoom out on like the from this recovery point from the crash, still bullish, right? Like that's how we use this information hand in hand to create potential trade ideas, and then we map out those trade ideas, right? And we also create the confirms we will need. For example, on GJ, that buy setup above 0.800 to 137 into 0.200, was that just randomly impulsively decided, or did we plan that from the very start of the webinar? Was that an impulsive trade that we said, "Oh, let's just take buys here"? Or did we create a list for ourselves of GJ safe buys? This is the checklist. Fail to break 136.5. Check. Respect LTF bullish structure. Check. Any Brexit optimism or the Brexit fear being waved off. Check. Positive UK data. It was on forecast, but we're going to say check. We were already looking for this information. We already had our checklist. Break above bearish structure. Check. I can't add a check mark, so I'm manually typing check. I know it looks stupid, but you get the idea. Break above 0.800 PPL. Right? Check. We already had these confirmed. We already understood what we were looking for. And if you were in capital hungry, you would have understood that, and you wouldn't, like, for example, if you were in capital hungry to execute on that trade, what the fuck is this? To execute on that trade, you wouldn't have even needed me, because you already understand based on the 200 webinars provided in capital hungry, the 50 educational webinars, and the market update webinar. We're already sent a market update. I already sent a market update to look for GJ buys, EU buys, UCAD sells during Asian session at 7:30, So yep, check mark, check mark, check mark. So imagine you just came on this stream, took my advice. No, actually, never mind. This isn't signals. This isn't financial advice. Never mind. We didn't do shit. So see how I was saying this was the higher risk buys on this lower time frame support, but let's just still see once we react at 1923. I wish we got the pullback to retest this bullish structure at 1912. That would have been ideal. US30, I'm out. These are my trades that I took. US30 on that aggressive pullback I closed because at least I still took $700. And then basically took 20 pips on the 1 lot and the 2 lot. And then just for tonight closed out at about $1,300 Canadian. which I used to work. I used to work 2 fucking weeks for that. You know what I mean? And that was not like a good paying job. That wasn't like a minimum wage job. That was like at a like financial tech for a Canadian bank, like a salary job. You know what I mean? So I used to work 2 weeks for that, 60-hour weeks, 40 to 60-hour weeks. So now I just earned that same 2 week paycheck in about a few hours of actual trade runtime. GJ was very clean though with the structure, with the respect of how we identified the seller's exhaustion, price coming above key level 0.500, how we identified lower time frame bullish structure developing, what we would need for safe buys and to hold those buys. That was beautiful. EU is making those highs like we expected as well, and will probably give us that pullback for the new 4 hour candle and for New York session to retest lower time frame structure and come above 1.84 key level. We have some very nice lower time frame bullish market structure um, being respected ever since we had this seller's exhaustion on EU and that US dollar weakness. This liquidity that was being generated was buyers order flow. So I just connected that structure from these higher low points, and then that's where I'm looking for a potential retest. You know what I mean? As we're still trending and creating highs by buyers, what would be ideal is a new 4 hour come back and then take those buys right back up to new highs. US30, I could see if US30 doesn't break these lows, I will probably take more entries, maybe at pre New York. But the only thing I'm iffy about US30 is the talk about stimulus progressions. That move almost got corrected now, and the daily gap has been filled. And we have more stimulus talks and negotiations tomorrow, like not tomorrow, sorry, today during New York session, and there's no timestamp of when it's going to happen. So there is still that fear and uncertainty that's lingering. So safer buys for me on US30 at this point in time on an intraday perspective would be above 28,600, where we saw buyers previously reject and fail to break above. And I know we're still respecting the support in this buy area we identified from the start of the week, but I do not like this intraday range we are in. We would need the actual agreement for the US coronavirus stimulus to be fully approved and ready to send out that money to the American citizens to have that mass optimism and easy buys above 28.6 to previous highs, safer buys above previous intraday highs. I closed my buys from here when we had this aggressive pullback. I just wanted to take the profit instead of taking $0, you know? I know, I understand it didn't take me out break even and we can go up higher, but I don't like to think in the mindset of what I could have made. I like to think in the mindset of what I could have lost, and I like to think in the worst case scenario. Too many people trade based on hope and based on the money they want to earn or they wish to earn, or all these like you know what I mean, just false hopes and false reasons. I just like to trade based on exactly what I see in front of me, and think about the worst case scenarios, right? Because a lot of people think about what they could have done, what they could have made, what they could have earned, but they never think about what they could have lost in a trade. So you know what I mean? Think about that. Tap yourself on the head and really digest that sentence. Really digest that sentence, and then bam, and bam. Turn the TV on, still the same fundamental points because it doesn't change. But we were playing that optimism. We were playing that Brexit talks being taken as optimistic. We already predetermined this stuff from the start of the webinar because we understand the fundamentals and technicals to a certain extent. So yeah, let's just let us do its thing now. We should get another deeper pullback for the new 4-hour candles, which these 4-hour candles are closing in about 40 minutes. Anybody take the gold buys from like this lower time frame support here, the higher risk buys? Oh yeah, I'll show you guys that desktop wallpaper as well. I'll post it on my Telegram for sure. Otherwise, we're still waiting for the breakout of 1923.5. Because this was a good breakout and retest of the bear structure and the flat candle body support created for higher risk, higher reward entries. I normally do not like entering in between the ranges, but it was at a point of interest as this support was being created above the bearish market structure from the intraday perspective. And again, if you guys want to learn more, if you want more free resources, join the Capital Hungry free Telegram here, Capital Hungry analysis chat, t.here, t.me/monster finance fx is the free Capital Hungry analysis chat. The Twitter for headline, this isn't as many headlines as the Capital Hungry newsroom, but posts a lot more headlines than other Twitter feeds you guys follow, and as well as analysis, reminders of when I'm doing live streams, trade ideas, chart updates. And then for more information about how I trade technically and fundamentally and how I view the markets, if you like the way I trade and the style and the way I provide information, and you want to see how I got to that point, you have of course all of these webinars on the YouTube. And if you want more than that, if you want the real-time streaming headlines, if you want weekly recap webinars, if you want to be a part of the Capital Hungry community, if you want market update webinars, mental reminders, sentiment reads, news briefings, economic data reports, and all that stuff, weekly refresher webinars, psychology webinars, if you want all of that, plus the session reminder alerts, key level alerts, being a part of this beast community, the newsroom, and all of the 200 plus webinars, then you have to come join Capital Hungry Private. But that is up to you. You can also see how Capital Hungry Private works if you were to join. If you want to pretend you paid and then see what your steps would be, you can click this video, which is like an introduction video of how Capital Hungry Private works. But there's a reason it costs that money, because we have tools, trading tools and resources that also cost money. You get what I'm saying? Like the newsroom, the price alerts, the servers and shit we host information on, all the webinars and everything you get access to. It's not like you just join Capital. Anybody in Capital Hungry will tell you, it's not like you just join Capital Hungry and you get a course to watch and then you're put into a group and then that's it. And then I just say a few words once in a while. It's been the same consistent systematic approach of like a weekly refresher webinar, of market updates, full pair analysis, newsroom updates, fundamental updates, that interaction between all of us traders in there since it's open, right? Plus all the actual educational webinars and stuff to learn from. But look at this beautiful, 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 beautiful rejection at 136, 137.200, which is okay because we're coming towards Asian session close in the next 40 minutes anyways. We would want a deeper pullback to possibly retest structure or 0.800 and then continue the way up. And we exited our trades at 137. I exited for the 20 pips, and then other people exited for the 40 pips, 0.800 of 137.2. Had no validate. We had validation to hold the trade above 137, but I just took the 20 pips because it's a bit harder for me to trade manage and talk and share information with like all the stuff that's going on, and I just want to secure the profit. But we did have lower time frame validation to go from 137 to 137.2. We did not have lower time frame validation to continue above 137.2. You can see we rejected on the dot there and started to show some exhaustion. Gold buys that you caught, you're up 40 pips. That's a good catch. We talked about we were so if you watch this webinar from the start, we reviewed previous intraday analysis, right? And we reviewed the the analysis we gave on the previous live stream. We talked about key fundamental points, economic events, market sentiment and investor behavior, market structure, key levels, and lower time frame price action. After that, we created trade ideas based on this information on Euro USD, GJ, USD CAD, and Dow Jones. Nothing set up except for GJ. We took the 40 pips on GJ from 0.800 to 137.2. Hopefully everybody not appreciates but actually gains value from these streams. I'm not trying to be a dick, but I know a lot of people, like a lot of services in this industry, they're more just in it for the money, and their content doesn't really provide as much value to the actual traders who are watching it or trying to learn from it. It's just constant like regurgitation of the same few like technical concepts you see across the board. Would it be advisable to take the short? But if you guys still I just want to make sure people get their value if I did do live streams, you know. Yeah, that's the private group. I most services, like for example, and this isn't any disrespect, like most mentors, they had a course or service first, right? Like for example, like the Daniel Savages never had a free service or trading progression first, right? Even like Rakil, he always had some type of trading course as well. um Astro Forex, those guys, they never did anything for free first. It was always a course first or a service first. Whereas me, I started this Capital Hungry free chat first. After I started getting involved in the fundamentals and seeing trading progression. So it used to be all this information was just me sharing that information for free. No, it's just because obviously I'm going to talk about Capital Hungry when people ask, "Hey, do you mentor? Hey, do you?" If when you Jeff, I know it's hard for you to understand, but when you provide hundreds of people or thousands of people with value and they also make money on your information, they're going to ask you for more, right? So when I just came here and provided technical and fundamental information that allowed people to take 40 pips with full confirms, that might be shocking to the retail community on social media and to people like you. And they're going to ask for more. They're going to say, damn, holy shit. How the fuck did he know GJ was going to do this? How did he know this for the last 5 streams that we haven't taken a L and these trade ideas are playing out? Wow, I really want to learn how he does that. And then guess what? Everybody's time has a monetary value. You think I'm gonna keep doing shit like a charity? Like suck my dick, you know? And that's why you're in the YouTube chat watching, and that's why I'm hosting it, right? We're in different seats. But yeah, all this you could scroll in the free chat for months. You could scroll in the free chat for months. But yeah, that was that. So yeah, that's the trade we took. And honestly, this Jeff Bick guy is honestly probably like a Daniel Savage. But that's what we took. Beautiful trades, beautiful trades. Dow Jones doing that. Yes. See how on Dow Jones I was thinking about what I could have lost instead of what I could have won. Because if I was thinking in a greedy mindset of how much more I can earn, I would have continued to hold that trade, and I would have been almost at break even right now. on that Dow Jones trade. But based on the price action, based on the intraday range, that's why I closed that trade and took that money. Don't worry, no, don't worry about the trolls or anything like that. You guys don't have to make fun of Jeff, but if Jeff wants to say comments, that's fine. Jeff's also been on all 5 live streams. Jeff's also been watching me for 3 hours a night, all 5 times. So keep. Oh shit. You know what I mean? He's watching. He's angry. He's sitting behind his screen. He's mad. He's mad that we're making money, that we're giving great trade ideas, that we're giving information, and that people want more from me. And he's angry. But guess what? He's still been watching. He's still been here every single stream. Every single stream he's been here. He could tell you that. Yeah, last time it was Daniel Savage who kept making fake accounts and reporting my streams. The FTMO gang, like the Asian stream, they were making fake accounts and reporting my stream. But yeah. But yeah, good job for me closing there on Dow Jones. Good risk management, good trade management. Good call for me to tell you guys. We're getting hard reversals here. One of the reasons why I'm doing this, another reason, I swear to you, I'll tell you the exact reason, is so I can get a bigger following and talk shit about all the other shit streamers and marketers, and then give people, because like you said, the value is there. You don't doubt that, right? So if I can get a bigger audience and show people true value for free like this, they will feel stupid that they're paying Daniel Savage $500 for a course or $60 for a Zoom call. Does that make sense? Who's Matt? I've never streamed before. This is my first time ever streaming. I don't know who Matt is either. Sorry. But that's my goal. Anybody who remembers me on IG, I used to call out a lot of the Instagram marketers that charge thousands of dollars for a course. That's why also when I did create a paid service, I made it a monthly fee, because one of the worst things I experienced was paying over $1,000 or over the cost of a paycheck for a singular course, and then that was it. Once that course was done, that was it. The value just was not there. You would be stuck in a group. Once you do that course, you don't get any more help. The mentor or service person did not care, right? Todd Capital? You guys talking about Todd Capital? You're talking about this guy, also who was in Capital Hungry. Todd Capital Group, who streams. He was in Capital Hungry. Trust me, don't worry about all these men. Yeah, Todd Capital, who did the Todd Capital Group, he was in Capital Hungry. Protein Paul, he was in Capital Hungry. I was never in anybody's course or service except for Forex Family in 2017. I was never in anybody else's stream or course or service. You know what I mean? So that's why. If I can, so now that you said this stream does provide value, right, Jeff? And this stream right now is free. If after this stream people want to join Capital Hungry, that's their decision. But can you deny the trade ideas or the value that's provided on the stream? You can't deny it, right? And this is for free. Right now, this is for free. The last 5 streams have been free. Any streams I do on YouTube will be free, right? So all I'm trying to show people as I gain an audience, and if they want to join Capital Hungry and I make more money from people joining Capital Hungry because of that, that's their decision. I'm not scamming anybody. I'm not selling them a singular course. They made the decision to join Capital Hungry after seeing the value provided here, right? So as my audience grows and people come to these streams and say, "Holy shit, There's a lot of value provided here for free, but I paid $1,000 for this course and didn't get shit. That creates a lot of resentment for retail traders. That creates a lot of anger for them against these marketers. Then you slowly have people waking up. You slowly have people saying, wait a second, why the fuck would I go pay $1,000 for Astro Forex? Why would I make why would I pay $10,000 for this course? Why would I pay $5,000 for this stream, etc., etc., right? The question is, why do streamers do this if they make huge amounts by trading? I have never claimed once that I am some millionaire from trading. You know what I mean? I do not make huge money from trading. Yes, I've had 5-figure months making $10,000 a month, $20,000 a month, but I'm a 25-year-old like dude in Canada where a house costs 900K, where my wedding is going to cost 50K, where I have a family I have to support and it's only like my mom and my sister. You know what I mean? Where I don't come from riches. So yes, that money I am earning, or this trade example, this trade I took and this money I earned tonight, yes, it's more money than the average person. Yes, it's more money than I was making at a 9 to 5 job. But did I get this quote unquote minor success overnight? No. If you go to the free analysis chat, I started from penny lots. At first I started from crashing accounts and losing money, right? Then I started from penny lots. Then I got to this point of earning more money than the average person and earning more money than a 9 to 5. But the reality is, this millions of dollars? No. Is this financial freedom money? No. Is this enough money where I can make sure everybody in my family will have a shelter and a home? No. Right? So that's what I mean. No. I did not stop scalping. I just cut my scalping back and I created specific trading days that I trade on. So I only trade Tuesday, Wednesday, and Thursday nights from pre-London to pre-New York, and I'll execute on scalp trades. Like for example, this 136.8 trade was a potential trade that could have been an intraday trade for 50 to 60 pips. I don't swing trade. I do intraday trades, 50 to 100 pip ranges, unless the market conditions do not allow that. And as GJ was having some fundamental indecision, um, we were getting that. I was not too confident in getting that 60 pip trade, so I just took it as a scalp. 15K night? No, I think the most I ever did was a 10K night. I've had a 25K month, but yeah, I've had great progress, 100%. See? Damn, Jeff, you've been following me since the IG days. Who are you? What is this fake account you're on? Who is it? Yeah, Raja is a great trader and streamer for what he does. And no, don't worry about it, guys, because we're coming toward. Don't worry about me talking to Jeff or answering his questions. Um, we're coming towards Asian session close. We already took our trade. We're not. We've already talked about our analysis. I'm just having a conversation with you guys in the YouTube chat right now. You know, it's not a big deal. I don't got anything to hide or be embarrassed about or to get angry about. You know what I mean? I could react with like anger, be angry. I could block the guy from the chat. I could stop him from commenting, but like I don't really care. I just made $1,200. Why the fuck do I care? Why do I care about Jeff? No. If Raja ever says he's my teacher, he's lying. He says that as a joke. Me and Rakeel are good friends in real life, if you guys don't know that. Alright? How many pips in profit before I go break even? It depends on the impulsive versus corrective moves, and it also depends on the market structure on the lower time frame. What's my opinion on controller? Like what is controller? Is that like a indicator? What was my aha moment? In trading, you will never have one aha moment. You will have dozens of aha moments. What happened with the Forex family? The Forex family was a good place where I got initial exposure, and and Ted and Ted and Raja put a lot of time and effort into it themselves, but the majority of the other Forex family mentors caused a lot of issues and caused a lot of drama. But I'm good friends with Ted and Rakeel, so I got no issues. I learned Forex families where I got Forex families where I first got like my introduction to currency trading. I always knew about the currency markets, but it's different knowing about the markets and actually trading the markets. No, I'm not gonna be streaming regularly, just because I have a private chat that I stream with more often, and we do more analysis ourselves. And there's a lot of other streamers at London. There's like three or four streamers at London. You got Monty, who's the big one, just because, and I'm good friends with Monty as well. Like we talk in private. There's a secret society. We have a secret group with all of us guys. But no, I'm just kidding. Or am I? But anyways, there's a bunch of other streamers at London, like Seed, uh, Raja, oh, sorry, Rakeel's at New York, Monty, and a few other peoples. So there's a lot of streamers to watch. Anywhere from minimum 1 to 3 times. No, no, all that stuff is a part of the Capital Hungry monthly service. Do I have losing days? No, yeah, everybody has losing days. Okay, so what's going on with the markets? GJ, we took that trade. Um, Buyers failed to break previous intraday highs, which we identified on the hourly chart here. Very strong rejection. We did get a clean break above bearish market structure in a retest of around 0.800 for this new hour, but we are still in this 50 to 70 pip range from the 136.5 lows to the 137.200 highs. So obviously that's another reason why I did not want to hold for an intraday period at this time. I just wanted to take that squeeze that we planned, and then that's it. Cash out on that. Euro USD, we're still waiting for a potential pullback of structure into the key level. UCAD had very solid reactions to the previous intraday lows in rejecting there. Dow Jones would have taken me out break even with that crab right there, but rejecting previous intraday lows for now. Dollar still bearish, Japanese yen still weak. Not too many negative headlines or fear filled headlines. No clear confirms for gold buys. GJ, for further buys, just because we have the 4 hour candle closing in 20 minutes and the Asian session closing in 20 minutes, and we usually get deeper pullbacks for pre-New York. I would prefer a pullback to test this lower time frame structure, then come back above 136.8 again to take buys. But yeah, I'm just gonna grab a drink and make a quick snack. If anybody has any questions, just leave it in the YouTube chat. No point of disrespecting other streamers unless their name is Protein Paul or Daniel Savage. Rakeel guys, Monty guys, they're my boys. If anybody is talking shit about me, you guys don't have to, like, you know what I mean? If anybody's talking shit about me, you guys don't have to say anything to the in the chat. Like, you don't have to defend me. It does not phase me. The only reason I was replying to it is because we already got our trade, and we're coming towards Asian session close right now in the 4-hour close. So I'm just going to be back. I'm going to go make a snack. I want the YouTube chat, I want the market refugee chat to actually ask some real questions about market structure, about a pair. Iron Man's dog shit. Never trust a man who's been trading 17 years and is still doing penny lots but calls himself the king of gold or US30. I'm from the GTA, yeah. But yeah, let's get some questions while I'm taking this 5-10 minute break and making some food. Let's get some questions in the stream chat about anything from technicals, fundamentals, market structure, and then I'll come back and answer those. I agree with you, Mario. One thing I learned about Forex is to trust no one who has gold on their neck. What do you mean, like a gold necklace? I only execute my entries on the 1 minute. Yes, I have never tried positional trading. I would need a lot stronger mental patience and discipline for that. Could you talk about growing your account? Best way to grow your account is via compounding, following a risk management plan of a minimum 1 to 3 risk versus reward, as well as following a percentage compound plan. $200 in climbing USD Mexican. Level to level trading is going well on the intraday perspective. But yeah, one sec. I'll read your guys' questions and everything. How, Jeeve, how are you not tired? I'm used to these hours. No, I don't have. I personally do not meditate, but my therapy is going to the gym, where I can relieve stress, clear my mind, develop myself physically, push my mental discipline as well. But yeah, I'll be back in like 5-10 minutes. Let's just keep it on GJ here. News headlines, no significant news headlines. Sentiment is still the same as we were discussing. Same macro key fundamental points are still valid. Economic events we went through. Don't forget to stay smart so you avoid crashing your account. Gold still respecting lower time frame bullish market structure. Obviously, we rejected around 1923.5 and did not get the confirms we needed for extended buys. We might still get that pullback to 1912 and bullish structure for the higher risk, higher reward buys. GJ, I'm waiting for the new 4-hour candle and for a pullback pre-New York to retest the bullish market structure. This would be higher risk, higher reward, and then coming back above 0.800 would be a lot safer to me. Rejecting the structure, then coming back above the psychological price level, very similar to what we executed on here, would be safer to me. No, I do not offer signals. Good morning, Batman. Good morning. How many girlfriends do I have? Just the one. Don't forget to subscribe to the Capital Hungry chat. Do that shit where you turn on post notifications so you get reminders about these live streams when I'm going live. You know what I mean? Watch all these educational videos and get your value. Follow the Twitter. where I also share headlines, news information, etc., etc. Join the free Telegram chat, analysis chat. And I hope everybody, let's cut out the useless banter. Let's cut out the useless, you know what I mean, banter in the YouTube chat, and let's focus on the value. Remember, we aren't marketers. We are traders. We are traders working together, trying to make some money in these markets by using different technical and fundamental concepts. And that's it. Gold didn't give the cleanest breakout of the bear structure just yet, so no. With how it looks like the 4-hour candle and the hourly candle is going to close in 14 minutes. Yeah, Raja calls his chat the gulag. I call you guys the market refugees. The market refugees who are just on some broken down boat in this vicious market ocean, trying to ride these different waves, trying to survive, and you just washed up on my shore. The hungry market refugees, and you just washed up on my shore on the stream, and I'm just trying to feed you. I'm just trying to give y'all some shelter. I'm just trying to give y'all some information so you can eventually not be a refugee. You can be a trader. Yeah, I'll be back, guys. Just give me like a 5-10 minute break, make a snack, get some hydration. Actually, we're coming towards 5 a.m. Those are some nice trades. Maybe I should be like Raja and get a nice joint going, and we'll come back and we'll just have some live chats. But any questions you guys have, though, technically and fundamentally, I will answer. And any trade ideas that were executed here were, of course, pre-planned. They're all pre-planned, and you can always re-watch this webinar again after it's saved to see the exact trade ideas we were looking for, the confirms we were looking for. The Twitter should be just twitter.com/capital_hungry. The amount of webinars we've done in the Capital Hungry private chat, from like pair breakdowns to like weekly recaps, live price action sessions, now that I'm scrolling after Alex reminded me to look at this, is actually insane. And this is just the Vimeo. This is just since Vimeo. I still have the Google Drive. We still have the Google Drive where we had all these weekly outlooks aren't even on Vimeo. These are from the older CH days. If you have a service or mentor out there that provides more value or puts in more work, then by all means. If they do full breakdowns, market updates, weekly recaps and refreshers, then by all means, you get your value. God damn, I've been working. I gotta give myself a pat on the back. Been working pretty hard out here. All right, I'll be back. All right, I'm done trading after that DJ trade, the US30 trade, I mean, and GJ. So I got a little zooked. I'm just gonna be chilling for the next hour now. Why couldn't we sell GJ from 137.2? I didn't say you couldn't. Like that was great rejection and exhaustion, but like it's not really like because we were originally taking those buys and we got those buys from 136.8 to 137.2, and we executed on that trade and it executed successfully. When you have those, when you just took a win, you just took a trade. It's not the best idea to jump in another trade, even though you think you can make more money quickly as well. You know what I mean? You should have some control and discipline. So the only reason we didn't take those sells, or I didn't say to take those sells, even though we had great rejection and we expected that pullback anyways, was that we already took those buys and executed on a winning trade. So there's no point of being greedy or jumping in another trade right away, and it's going against our bias too, right? Like our bias is still buys on GJ. 4 hour candle just opened. This hour 4 hour candle just created its lower wick, retesting 0.800 on GJ as well. I want to see how it runs for pre-New York. We could get a deeper retest, but I'm just going to keep an eye on it. Gold, obviously, we didn't get the safe buys, and we might get that retest of 1912 for these higher risk buys. If we maintain holding bullish structure, hold above 1912, and dollar stays bearish. I don't, even if dollar does a little pullback, even if dollar pulls back to like 93, still very bearish on an intraday perspective, still very bearish on the higher time frames, and markets still are optimistic. So that inverse correlation between US dollar and gold has been like nice to play with. Yeah, see how it's rejecting here pretty much on the dot still. Looks like we'll get a deeper pullback for the 4 hour. EU as well. We're waiting for a pullback as we've had a significant break above our key level, 1.8400, and testing around these previous intraday highs. So I just want to see on the lower time frames for this 4 hour candle, if it does come back to retest structure and fail to break below it, and we see lower time frame support being formed and come above 1.84, and if US dollar weakness continues through New York, then we can continue that move up to the upside. But there are further US stimulus negotiations and talks going on today that do not have an active time set. They could be any time during the day, right? So you do want to keep an eye on your headlines, because if there is any negativity surrounding those stimulus talks and they are further delayed, the US dollar will pick up strength and market fear will pick up for North American markets, and we will actually see a break below structure and below the key level. Okay, so um just be cautious of the US stimulus talks that so far they are progressing, and because of the headlines yesterday towards the end of New York session about the progression in the stimulus talks. That was one of the reasons the U.S. dollar weakened a bit and softened, and we had Dow Jones gap up at market open. That was one of the reasons behind that. But we can still identify that it's going to heavily depend on the talks that will come today, and the deadline's pretty much coming up by the end of the month. So I don't know what they're waiting for. US30 right back down to this level again. Look at the 1 minute reactions at this level. If it doesn't break below here, this could just be a price grab, because look at the 1 minute reactions at these intraday lows, And once you shift out of the bearish lower time frame structure, you get a nice upside move, right? This is multiple rejections and failures to break 28,600, but if we get a lower time frame support created here, like we've seen previously, this could be a buy setup price. And if the stimulus talks are good, this thing's gonna boom. If the stimulus talks are good, this is a lot of liquidity that was being generated in buyers' order flow. Oh shit, my bad. The point. Yeah. Sorry, yo. This is what I was looking at right here on Dow Jones. At these intraday lows, this level 28,200. Look at the reactions we've had here. And once you shift out of the lower time frame bearish market structure, you have a nice move to the upside of like easily 300 points, right? It's a nice range. Very similar to thing here. We had sellers impulsive candles in bearish lower time frame structure. Once we failed to break there and we broke above the bearish market structure and created that support, you played that 300 point range, right? The only thing now is we've had multiple rejections here, and this buyer's upside from this point was not as aggressive. It was a lot slower and corrective. But what I was saying was, if we fail to break below this level and get another lower time frame support form, and then we have positive stimulus talks, that would be ideal for another upside move. GJ's new 4-hour candle created a top wick and is below 0.800 for now. Looks like it's going to give a deeper pullback. The previous 4-hour candle also closed below 0.800. Yeah. It's looking like it's going to dip down to possibly retest structure here. And this 4-hour candle still closed below this range and below previous highs. Like that was another solid rejection at 137.200 on the dot, right? This is still looking like buyer side liquidity to me, and this could just be a pullback for pre-New York. I would only see long-term intraday safe sells really at a break below 0.500. When you're looking at the structure, you're looking at the support, and we're looking at the impulsive moves. And of course, we're noticing buyers are struggling to break above that strong intraday bearish structure. So I can understand why we've had this liquidity phase and why we've had this consolidation phase to generate liquidity and order flow. But we would still need a break above this structure and really above 137.2 for safer buys. Kanye West, he's actually running. That's crazy. We got the exact deep retest we wanted now, and we're reacting at those previous lows for this new 4-hour candle. If you guys want more information about like lower time frame confirms, all that stuff, just go watch the previous scalping sessions, or especially the scalping 101 series. It's a 4-part series. It's 5 hours total. The scalping 4-part series. It's 5 hours total. So, and then if you really want the secret sauce, sorry, yo, gotta join Capital Hungry. Okay. Oh, Euro NZD. How many strategies do I use while trading Euro NZD? Fundamental on CAD. What do you mean by any fundamentals on CAD? Like, this is by far the best channel. Da, da, da. Thank you. Appreciate that. Chad Johnson. That's like the that's like the dumbest question I've seen tonight. You can see the screen yourself. You know what I mean? You would see if there's indicators on the screen. You've been watching the stream for like hours right now. Have you seen any indicators? You see like anything? Did you see me pull out any indicators, or do you see any indicators? What makes me different than Raja setup besides the news? What do you mean Raja setup? I don't Rakeel doesn't look at first of all, Rakeel on GJ, the 0.200 level, 0.0 level, 0.500 level, 0.800 level. Do you guys see Rakeel use that? Wicks don't lie on GJ. Where do you think he got that from? Huh? Where do you think he got that from? Go ask him. It's from your boy. I back tested that shit. So where do you think he got that from? And second of all, Rakeel, he just looks at the most recent area of price action and market structure, and then executes trade based on those ideas, right? So what's different between Rakeel and I is the one is the whole fundamental side, and like looking at, we observe the news headlines, we look at what economic data reports we have, we look at market sentiment, for example, like when we're looking at the dollar and we're looking at the Japanese yen and we're looking at equities, damn, right to previous intraday lows, and we're looking at equities, we're not looking at them to trade. We're not looking at global equities to trade. I'm not looking at the US dollar to trade the dollar specifically, or looking at the yen to trade that specifically. I'm using it for information. Fucking mind blasting, right? I'm using that for information about investor behavior as a whole. How is smart money moving through the markets? Is it a mixed sentiment? Is there mass market fear? Okay, what is causing this mass market fear? All right, these three XYZ reasons are the reason that investors are more fearful, so they're going to be putting their money into safe haven currencies. They're going to be less risky, right? Or is there mass optimism? Okay, what are the reasons the markets are optimistic? Okay, markets are optimistic because there's a Brexit deal, because there's a stimulus, confirms, right? And because there's a coronavirus vaccine. All right, what does this mean? That investors are going to be putting their money into equities, safe haven currencies are going to be weaker. All right, this is understanding investor behavior and market sentiment. Once you understand that, then you go, oh shit, this is the fundamental reason investors are more optimistic. And this market optimism translates into this technical chart impact. So now markets, let's just say the scenario was, which we did have for a period of time, there was good Brexit talks, right? Markets are optimistic. The UK stock market is bullish. Japanese yen is bearish. Let's just say Japanese yen was bearish, right? I'm not trading the yen. I'm not trading. I'm not trading UK FTSE stock market, but I'm using that for information, right? And then you look at GJ technicals and it's in bullish market structure. What are you more confident executing on? Do you want to look for pullback sells? Do you want to try to guess sells? Or do you want to play with that investor behavior, that overall market sentiment aligned with the technicals, right? And then at those technical areas of interest, price areas of interest, either based on historical price points, psychological price levels, retests of market structure, 50% correction moves of like impulsive moves, whatever it may be, right? At those price points and areas of interest, then I look at buyer and seller reaction and price action on the 1 minute chart to start noticing the reactions faster, to start noticing any signs of exhaustion, any more confirms of momentum. What is the lower time frame structure looking like, right? So I don't think I'm not saying that everybody should do that or that's the best way to trade, but like I think that's very different. I think that's extremely different from how Monty trades and what he does on his stream, or what Seed does with break and retest, or what Rakeel does on his stream, in my opinion. Because we're looking at all that information hand in hand, right? And we're using and we're looking at this data and this and the bias of investors on these different financial instruments because it tells us information about the market fundamentally. But you have to understand the macro concepts first. You would have to understand that the Japanese yen, the US dollar, the Swiss franc are safe haven currencies and how they operate and what it means when they're bullish and what it means when they're bearish. You have to understand that. You have to understand that the volatility index can tell you about fear in the US stock markets just based on its technical structure, right? You have to understand that. You have to understand what it means when global equities were bearish and stock market was bearish. What does this mean about investor behavior? What does that mean, right? And then you line this up with higher time frame technicals. You line that up with intraday market structure, and you line that up with refined price action and watching buyers and sellers strength on the lower time frames, and you bring that all together, and then you execute on your pre-planned trade ideas. And like I said, you guys can join the free Telegram. You guys can join the Twitter. You guys can join and watch. Watch all the YouTube videos, and you'll see how I've been doing this analysis for an extended period of time now, from the higher time frames to the lower time frames, the fundamentals, this style of trading. It's not a strategy. It's just using information proactively and reactively about the real world financial economic markets alongside technicals, just based on, and the technicals are just historical key price points, because historical points have more significance. You see better reactions at these price levels, market structure, and price action. If you guys go to the YouTube channel here and just come in this corner, if you guys see that, right here, this is the Capital Hungry website, this is the Capital Hungry Twitter link, and this is the Capital Hungry Telegram link. If you just go to the YouTube page and then click that. Vikram, that is because the US dollar applies to economic rules and concepts such as supply and demand, just like any other product, good, or service. Okay? Like basic macro concepts like supply and demand impact everything. So with the US dollar, when COVID hit the markets and we had mass market fear and it's a safe haven currency, if you go look at the US dollar, if you look at it on the higher time frames, this spike in the US dollar in February, spike up, was when coronavirus fear first hit the markets, right? So, yes, it was behaving as it should have. You had it just operating normally, just in a trending market. Coronavirus fear hit the market, and you had this massive, massive spike in impulsive move to the upside. Then you had, because coronavirus fear also led to a crash of the US stock market inverse, right? We had the US dollar go up because it's a safe haven currency and there's mass market fear. The stock market crashed and went down. The Federal Reserve used their tools of printing out more US dollars to put into the stock market to create an artificial market and pump it back up, because the Federal Reserve and the US government cannot afford to have the US stock market crash down to zero, okay? Because this would actually lead to a US economic depression. They would much rather weaken the US dollar for a short term extended period, even if it's for a couple of years, than have the US stock market be extremely weak. Because if the US stock market was extremely weak and went to like bankruptcy levels, all of those companies in those various sectors, from pharma to food to technology to the service industry, would go under, right? They would not be able to operate. Very similar to like when oil went negative, the price of crude oil went negative, you had hundreds of oil companies go bankrupt and needing bailout because they could not make a profit on oil. And the reason oil went negative during coronavirus pandemic was because the demand of oil was extremely low, because you had billions of less cars on the road as the world was locked down, and you had tons of industries that use oil shut down, such as factories and other industrial plants. They were shut down, so the global demand for oil was extremely low, and you had a heavy over storage and oversupply, which I'll show you guys in a second here. Okay. But anyways, that's just talking about oil. So that same concept applies to the US stock market and the price of these individual companies' stocks. If the stock market crashed down to zero, or if it went down to, let's just say, crucial low levels, all of those stock prices would also correlated also, all of those correlated stock prices would also fall, and then you would have all those companies go bankrupt, and then a real US economic depression. Okay? So what the Federal Reserve did was what? They increased the money supply of the US dollar to flood into the markets a couple of ways. One, to buy bonds and securities to help inflate the price of the US stock market and keep it healthy. And the second was printing out stimulus to give out to the US citizens who lost their job. This heavy oversupply printing of the US dollar and lower demand of it caused it to fall. That's why you had, when the as soon as the Fed started that printing, the US dollar fell and you saw stock markets do a V-shaped recovery, right? Dow Jones right back up to like 28, 29K. It's because of the Feds using their tool of printing more US dollars, quantitative easing, etc., etc. Okay? The example with oil. why oil went why oil went into the negatives is because of this. This oil storage is an inverse correlation of the oil price chart. If you go to crude oil right now, the chart, it's an inverse of this. When you have a massive oversupply of any product, currency, it doesn't matter, the price of that product drops. And especially if you have the one-sided bias of a high supply and low demand, it's like you're gonna have an extremely low price as an outcome. And then the opposite, if you have a limited supply of a good but extremely high demand, it's a rare hot commodity, you can charge a shit ton for it. That's just common. That's just common economics that impacts anything. So in 2020, when coronavirus hit the markets and you had all countries around the world get locked down, billions of cars off the road that obviously consume gas from oil, and you have millions of different, not millions of different industries, but thousands of different industries that consume oil from around the world also being shut down, you have the demand of global oil being cut in half, drastically being cut. So a very low demand for crude oil, but a massive, massive over storage. This is from 2015 to 2018, where an average over storage of oil, where an average over storage of oil was 80 million barrels. 70 to 80 million barrels. In 2020 alone, during COVID, we had an overstorage of 140 million barrels. We still have not we still have not cut through and had enough economic activity or rebound to consume this oil yet, right? So that's why when you go to the crude oil chart, we could use that information. And in Capital Hungry, we took advantage of the oil sells from $40 a barrel. This webinar right here, crude oil breakdown from 6 months ago with only 800 views, called the oil sell off from $30 a barrel down to $5 a barrel. And then obviously we didn't know it was going to go negative, right? Because nobody
Okay,
knew it would
welcome.
go negative. But we called the pullback to like 25 $30 a barrel, and then the sell off on oil all the way down to like $5 a barrel 6 months ago from here to here, based on that fundamental information of understanding supply and demand, right? And based on understanding the technicals as well. But that same concept can be applied to understanding the US stock market. That's why the Federal Reserve, the politicians such as Trump, they can't afford to have the US stock market actually crash. But it was used as a tool to transfer wealth, which we have seen repeat in history many, many times before. So I really suggest you guys watch this greatest
Okay,
transfer of wealth webinar as well, because it will teach you a lot. If you watch that oil breakdown, if you watch this Dow Jones breakdown, if you watch the central banking corruption webinar, as well as this gold educational webinar, it will teach you a lot about the market fundamentals, like a lot. Even this timeline of GJ, all of this stuff is connected on a macro perspective. All of it is connected, right? It's crazy. Yeah, the question for why oil went negative is what Jose just said. He answered it perfectly. Because at the end of the day, oil is like a physically consumed natural, not a natural resource, but a commodity, right? It's used in industry, and it's actively stored, it's actively transported, etc. So because what I just showed you, that there was that heavy over storage, not just the oversupply, there was nowhere to store oil. Nobody wanted to pick up the futures contracts because nobody wanted to, like, it was pretty much valueless. So you pretty much had the price of that futures contract continue to drop until somebody finally picked it up, which was at minus $40 a barrel. So somebody did get to sell either oil futures or physical oil barrels from that price, for storage and transport and delivery fees. Data is the new oil. Yeah, I would not disagree with that. Data is huge. You guys watch that Social Dilemma, that documentary, man? Data is a big thing. But yeah, if you guys watch those, it will teach you a lot. GJ did a nice pullback to point. I wasn't paying attention to it. It looks like that 4 hour created that lower wick, and it's gonna go back up to the highs now, potentially to fill the wick on the 4 hour, and break higher if we go above 137. I'm getting tired now. What time is it? 5:30. It's 5:30 already. Holy. Yeah, you guys could see, you guys could watch all, if you really wanted to put the time and effort, you could watch all these webinars are free, and you could see exactly my process of how I develop my analysis and all that stuff from the start of the free Capital Hungry analysis chat. It shows the trades taken, the analysis, like first dissecting and learning about fundamentals. How about, oh, we canceled that after the gyms opened up. Fibonacci retracement is based on a simple concept of impulsive versus corrective moves. That you have impulsive moves in the market, then corrective waves to generate more order flow and liquidity as you have buyers and sellers working hand in hand, right? So, what I mean by that is when you have an impulsive move to the upside and then a pullback and you're continuing in an upward trend, you're continuing in a bullish trend, right? Most of the time, based on historical repetition and how the market works on buyers and sellers closing their order flow, when you have buyers enter orders from a low point, and on an intraday perspective, it extends to create an intraday high, they cannot exit the market without having sellers take over their orders from their point when they close their orders, right? Buyers and sellers are just constantly working hand in hand. But because in our modern day, you have thousands of banks active in the market, thousands of machines active in the market, the liquidity, these transactions happen within milliseconds. You don't even realize it, right? It's just automatic, but at the core, it's a buyer and seller working hand in hand. So when the buyer closes off their order point, closes off some of their buy orders, and then sellers jump into the market to relieve that order flow, or you could say like a bank is working with a hedge fund, then you get a pullback, right? If the higher time frame trend in the intraday trend is bullish, this pullback creates a higher low and another secondary entry area for buyers to enter the market again to extend to a new high. Okay? Now, these impulsive moves are followed by these corrective moves, which most of the time is a 50% correction. All the Fibonacci retracement tool is a 50% correction of any impulsive move. So let's just say you have a support being created, and then you have an impulsive move, and you go to measure this move. And from the support and the low, let's just say it was 60 pips, right? All the Fibonacci retracement tool is going to show you is a 30 pip pullback, a 50% correction of the impulsive move. We're at that Fibonacci 61.8, whatever the 50% correction point is on the Fibonacci retracement. All that is the 50% correction. You do not need a Fibonacci tool or anything like that. You could just measure the moves, right? So let's show you guys an example. let's go to a different. Let me erase this shit first. Okay, let's go to a different feed. Okay, so GJ. Sorry, my mouse died. Let me plug this in. Okay, so I don't know how to use a Fibonacci retracement tool. Like I've never used it, but I just used to measure impulsive moves versus corrective moves, or if anything is gonna break structure or not. Okay, so let's just say GJ. Let's go to the hourly chart. We have very strong bullish market structure here for an extended period of time, right? You would have bases created and then price from a base where you had some order flow or a low point extend up to a high created, right? And then a pullback or a corrective phase until an extended to a new high. Majority of the time, unless you have extreme one-sided fundamental volatility and you have very strong impulsive moves, let's just say you measured from this base to this extension point and it's 350 pips. From that point down, a 50% correction of 350 pips is what? Like 175 pips? 180 pips? That's the size of the corrective action back. It's 50% of the impulsive move from the bottom to the top. That's how a Fibonacci retracement tool works. You don't even have to use the tool. You could just say, okay, GJ from the bottom to the top did did a 300 pip impulsive move. So I'm expecting at least as a new high is created and we're getting some exhaustion, ideal entries for another extended move to the upside would be from 150 pullback. 150 pip pullback, right? One of the key digits on the Fibonacci retracement tool on 50% correction is I forget which one it is, but it's around that. It's around a 50% correction of the impulsive moves. Mm-hmm. The bigger the impulse move, the bigger the correction. No, I said I don't use the Fibonacci tool, but I'm saying that's how like the retracement tool works based on impulsive and corrective actions. But I have noticed through back testing that there's usually a 50% correction of the impulsive moves. I'm saying like I was just saying I've never used the Fibonacci tool, right? Because that's a common fundamental aspect as well when you're creating these market waves and you're having like for example in that uptrend the buyer order flow being closed off, that pullback back tested majority of the time is a 50% correction of the impulsive move. It's not something you can use like just it's not something you can use just standalone. You use this alongside other market structure cues, price action, market sentiment, because these different indicators are just ways that technicians, chartists, um, use to try to read candles and trends or try to just read the chart overall. But the chart itself is actually printed based on fundamental reasons. right? So what time is it right now? 5:40 in the morning. Yeah, if you guys enjoyed the stream, we caught some nice GJ. We caught a nice GJ trade. I know some of you just caught another 10 pips on GJ, which is a good trade as well. But if you guys enjoy the stream, if you guys enjoy the content, if you want more of this, then just like, subscribe, share it around with your other trader friends in your other trading groups. And yeah, I'll do it more often, you know? Yeah, I'm just gonna grab a drink, and then we'll just watch for the next like 20 minutes for this hourly close. Let's quickly summarize everything that's happened. Volume. But gee, would I still have recommended entering at 0.800? Yeah, because we're still respecting bullish lower time frame structure, right? We're still respecting this bullish lower time frame structure for now. Just understanding order flow can just help you better dissect market structure and then watch reactions of buyers and sellers at key areas of interest based on historical points, based on areas of market structure, previous areas of price sensitivity or reaction. For example, like you can see the exhaustion on the lower time frame at this key level, and we had the same thing now too. Joe, I want more W's in the chat for that secondary GJ scalp right now. 16 pips. Let's get more W's in the chat. Anybody catch that one? Yeah, that was a good quick scalp too for the stream ends. See if it almost reacted around 137. market refugees. I'll be back in one sec. PRB, PRB. This is probably the best stream. Thanks, man. Love the stream. Long time subscriber. I've been on live a few times. Yeah, we take the trades. Well, it's not financial advice, but it's up to you. I guess it is purely for analysis purpose, so it's up to you what you want to do with the information. But I took the trades. Like that was the GJ, the initial 20 pips we got. I was already in Dow Jones. Oh yes, baby, and I'm in this right now. Yes, baby, let's go. W's in the chat. W's in the fucking chat. W's in the chat. I took that at tell 137 right there. Damn, that was a fast reaction to 137. I caught lucky, yeah. But yeah. So I'm done. I'm done, so. So same thing here. First trade I took, the first GJ buys, the scalp buys were these. When we were following respecting bullish structure, we broke above 136.8 psychological price level after having a break above structure, and then I took it up to 137. And then after we rejected 137.2, I said for the new 4-hour candle, if we could get a pullback to retest structure or 0.800, that would also be a nice potential buy. And then I took the 0.88 entries here, but I got a later entry, and I just closed that at the 137 tap for another 20 pips. Right there, 137. These are the previous GJ buys at 137.8 up to 137. Sorry, 136.8 up to 137. I had to close my Dow Jones buys at $700 profit instead of $1,200 profit. So that's what I was up there. This is a member who made $1,100 on that scalp, but then he went away. And then I just took that new 4-hour candle scalp for 20 pips right there. So I'm good to go. I'm chilling now. GJ Wyland right now. But if you're in from 0.800, um, you could still hold that. Like, sorry. But yeah, if you guys want to rewatch this, you can always rewatch it after. Because what we were talking about for this setup and all the confirms we got, what we were talking about being patient for the new 4-hour candle to create its lower wick and see how buyers and sellers react. You can see we did dip a bit lower than 0.800, but we created a flat candle body support. We did not test previous lows or break bullish structure, and then obviously we came above 0.800 for buys there. My entry was a little bit late, and then we just held that squeeze up. If you guys want to see my intraday biases, like a higher time frame bias, you can watch the start of the stream. I closed all my positions, so I made about 1,500, 1,800. I'm getting sleepy too, but just stuck to the GJ buy bias. played that Japanese yen weakness, played the stronger UK data, the break above in respect on 136.5, the break above bear structure, the respective bullish structure. I'm just watching reactions here now. Anybody else grab that one? You guys grab. Yo, chat made money today. Come on, chat's making money with my streams. You can't deny that. You're getting value and you're making money. Come on, don't deny it, chat. Refugee chat, don't deny it. Tell the truth. These are some strong rejections at 137 right now, so you might as well take the 15, 20 pips, whatever you guys had. I enter on the 1 minute time frame. That's why we're watching the 1 minute chart here. If you guys can see. Safer sells would be below 136.500 or at least 136.600 below this price sensitivity area you can see here and below bullish market structure. Otherwise, lower time frame structure is looking quite bullish. Yeah, the two trade. Okay, so gold, we never got either gold options, so we weren't watching that too actively. Euro USD, we are waiting for this pullback to test structure and key level, which might run through New York session. So please rewatch this to understand the EU setup as well. We're waiting for UCAD is following the yellow magic line and gave us that pullback buy upside move retest of previous lows, and we're rejecting around there. Oh, I was telling you guys, man. I was telling you guys about the buy scalps on DJ as well from this exact same low point. That was 120 points. But GJ is what we primarily executed on. The buys from 0.800 to 137 and 137.2. And then the second GJ buy setup was for the new 4-hour candle, as we identified the previous 4-hour closed bullish still, and we're having markets a bit more optimistic with our safe haven currencies being flatter in the lower time frame bullish price action. We're waiting for that 4-hour candle to create its lower wick, and it did, which was this move. This corrective action did not break bullish market structure. It did not really break below 0.800. It was like 3 pips below it, and it did not test previous lows on the 1 minute. So then obviously we took that scalp squeeze back up. Refugees are fucking eating. Refugees are fat refugees now. Y'all getting fed. Y'all some fat ass refugees now. Gold, I'm still waiting if we get that pullback to 1912 and if US dollar is still weak through New York session and we hold the structure and make a support above 1912, though that would be higher risk, higher reward buys. Euro USD, similar idea. As per the lower time frame bullish market structure has been respected very well. And we're still like creating from these low points, we're still creating intraday highs, creating a new high here. So get the pullback. UCAD gave that upside move overnight for about 25 pips and is rejecting the previous lows now, like we expected. Let's see if US dollar weakness. Yeah, US dollar still looking quite weak. market optimism from NY, that US dollar weakness still held through Asian and through London session. We still have more stimulus talks today. No deal Brexit is still being taken as optimistic as GJ is respecting lower time frame bullish structure. And we still have to watch global COVID cases. UK CPI was neutral overnight for GBP, 0.5% forecast, 0.5% target hit. If you guys are trading New York, just watch out for Federal Reserve speakers through New York session, and Canadian Canadian CPI and Canadian retail sales. And then bam, stay smart. We're all getting sleepy. That should wake you up a bit. Bam, stay smart. Don't crash your account. Follow your trading plan. Follow your risk management plan. Focus on your long-term vision. Keep emotions out. Understand this is a probability game, and it takes time, effort to takes a lot of time, a lot of effort, and a lot of work to reach your success goals. So don't rush the process. Enjoy it. And if you guys like the content, find value in it, please share it with other traders, other trading groups. Send the stream a like, subscribe, watch the recap, and take notes. Yeah, I'm gonna end the stream shortly. Oh, probably like now actually, 6 a.m. So thank you guys. Thank you guys for coming here, keeping me company again. Thank you, market refugees. I appreciate y'all. I appreciate you. I appreciate the private chat. I appreciate you, market refugees. If you paid for the membership, message Krishy P on Telegram, or message me on Telegram with your invoice and Vimeo ID, and you can get added to the services and start getting your trading education up. Yeah. So don't forget to recap this webinar, the live stream, take your notes, backtest the different theories that are shared. You can buy more lollipops, eh? Damn, I'll lick them up. Refugees come to me, gulag. How do I even end this?